And I would appreciate this morning if you guys used free chat. You're going to be trying to chat with us. All right, hello YouTube. If you are in the YouTube stream, you can use the YouTube chat. We'll have that up as well today. So we got about a half hour to the market open. If we start with the indexes, we'll see what we see, right? So 2-2 kicking pattern, still good. So anyone that's short from the quarterly signals, we're nowhere near reversing that still. So if your stock isn't reversing that, you're good. With the gap down this morning, we're going to be closer to going outside year on SPY, which is right down here. 46643. And that's where we've been trying to go since below this. About 590 or 589.39. The reason that's the case for anyone that's, not stratting or brand new to this is whenever you have a bar that takes the previous high and then goes red, it's attempting to go scenario 3 by going new highs and new lows to the previous range. This happened in 2022. You'll see it went slight higher high in red, and then you know where it's going. It's going to take this out, and then it does. This happened during COVID. Made new highs, went red here, went outside, and then it went outside again. New lows and new highs twice. So this year, new highs, and then we're still looking for these new lows. This is the thought process. And until this daily reverses, by making a 2-2 reversal or going into new highs to the previous highs, it's still going down, so we're still trying to take that out. Given that everyone's selling into this and we're gapping down, we'd prefer to see it go up first this morning, just because if you're short, you're getting what you want. We want traders we can trade against. So if you're short into today, you get what you want, market gaps down. That's a good thing. Now, if it goes green, then we have some buyers entering the market. And then if it can flip back red, then all those buyers get jammed. They're going to have to sell to close, and that can get us puking again. So we don't have to be in there right away this morning, but we are continuing the move. If we go to the Qs, the same thing is true. Gap down. Anyone that sold yesterday gets what they want, taking out the lows. So we'll see. IBM, same thing. It's a little stronger, but taking out the lows as well. And Dow Jones, same thing. Gap down, taking out the lows. Anyone that's still short gets what they want. That being said, there's not going to be much to do right at the open. If you watched our weekend video, oh no. Uh-oh. Let's see, last modified 406. Well, it looks like we missed out on our weekend vid. Actually lost the list here. But some of the few weekly signals we have going into this week are the staples. Should be a 2-2 to the downside, which you can see gapping down this morning. That tells you a lot of things. It tells you UL, which you can see gapping down, 2-2 week to the downside. This is the broadening formation in here. So it's trying to come back through all these guys. Go to Colgate. You're going to see potential 3-2 week to the downside. Trying to come back through all these guys. Broadening formation is going to look like this. And let me make sure my desktop audio is off. There we go. Procter & Gamble. You're going to see 2-2 week to the downside, gapping down. So these are things we can go after, but the same thing. If it's gapping down, we want to see them pop up first so we can actually have a signal to get in there. Even some of our crowd favorites in the staples, like Mondelez, might have a 2-2 week to the downside. Tyson, which is a little bit more of a chop shop in there. Let's see. And I really want to pull up that weekend vid just because somehow I lost that list. Yeah, NQ's having 100.1er candles. This is awesome, right? Let's see. So the beautiful thing, skip to the end of the video. We always have the list there. So just pause it and copy it, do what you want. But let's see. Cost is going to have the outside shooter with Walmart. So you see all of these things are going to open twos down right away, which is good. So you can trade weekly signals right away. It's just you need some triangle layout first. And then the only thing on the upside we really have is RKT, which is in the mortgage companies. Supposedly there's some consolidation of those mortgage companies. And RKT seems like the crowd favorite. So you can see, unlike the rest of the market, which is puking, RKT closer to a 2-2 quarter above this, 1590. With the whole market gapping down, it does have a slight gap down today. But since we have an aggressive buyer in here, we might see the gap down buy to get that 3-2 week going. So we go into the 60s. You're going to see a mother bar to this 60. We'd like to see the lower low and then gap down buy if we're going to get that. And on the upside, that's one of the few things we have. Outside of that, there's not much. There's some daily signals and stuff on the upside. Which if we go to the scan site, we're working on it, just so you guys know. But take a look. We do have some updates and stuff going through today, so it might be broken at right now. Does look like it is broken right now, so not gonna be able to use that yet. But there is a lot of daily hammers with the market gapping down. We're just gonna hit the scans and see who's taking out Friday's highs and lows, last week's highs and lows. That'll tell us what to do. So to start the day, we're just not gonna be too crazy in here right away. As far as the gappers are concerned, if you want to list Costco and Walmart to go down this week, we have weekly signals there. Doesn't mean they have to go down. It just means we have signals. So given additional actionable signals to the downside, they will go down. But we need to see those actionable signals down. Yeah, so on the gappers, it's NVIDIA, Tesla, Palantir, Shops, Starbucks, Microsoft, Google, Walmart, Costco. So nothing we don't know about, right? See NVIDIA on the quarterly 3-2 from the macro vid. Down they go. Tesla's. So I guess we taking the quarter down here. Closer to the inside quarter PMG trigger this morning, which confirms the rest of the market gapping down. PLTR, it's still inside quarter. Shopify, nope. Starbucks, still shooter quartering down. Yeah, so there's nothing too crazy to talk about on the downside here. One thing we did see overnight is silver. You see silver firmed up. So triangle layout on the daily pokes up. 2-2 Rev Strat day, pivot machine gun, all these guys pokes down. And potentially the 2-2 back up maybe on tomorrow, but maybe we get a potential 3 today. At this point, if we go on the 4 hour, you can see they spent almost 12 hours stuck inside of here. About an hour left to close it out. So you'd have a 12 hour, 2 down, 1 on a 12-hour basis. And if we go to SLV, you can see, so silver, if you were short any of the market going into the weekend, get what you want, market's gapping down. Silver is gapping up a little bit. So if that can drift up into these guys, 2801, potentially get some short squeeze in there. And anyone short in here might have to close. So we'll keep an eye on that with the precious metals. And that's more so just across the basis on the sectors this morning. But really, we're just not seeing anything change. And it looks like I'm going to have to restart my Thinkorswim before the open here. If you have any questions, feel free to drop them in the YouTube chat. If you're normally not on these streams and you have any questions, and if you're in premium or any of the other chats, let me know. So normally we'll have this on the right side of the screen whenever we do a stream, and it's just going to be the list of what we're thinking. So in the morning, really, the gappers is kind of just, pick your highest volatility name and wait for 3060s to set up. It's our game plan there. Get to the stream here. Doesn't MOH look strong too? Yeah, it is stronger. 2-2 quarter. Nowhere near a 2-2 week, but you can see it's closer to a 2-2 day this morning. So this week, they might go 2-2 day and you don't got any evidence to those buyers anymore. Yeah, it looks like we're going to have some decent earnings stuff this week. What, Delta Airlines, STZ, which I believe is a Staples name, CarMax, Lovesac. Got Levi's after the close, WBA tomorrow in the morning, Tilray in the morning. And then on Friday, JP Morgan, BlackRock, Wells Fargo, Morgan Stanley. Wow. What do we think about Morgan Stanley earnings? Might not be good, right? Probably come back through all these guys. So when you look at this is one thing a lot of people do wrong when you're trading earnings. If you want to trade bank earnings, what do? You go in there, probably a few weeks before, if not just the week of, and you look for ways to create winning positions in there. So if you want to hold puts or calls in there, you just got to make some money there and then risk their money instead of risking your own money through earnings. So if you're looking at those bank earnings on Friday and you're like, hey, I want to play some of those this week, 30-60s on the banks and wait for those simultaneous breaks to set up, that's what you'd want to go for if you're going to try and get some position there. We got 97 people on the YouTube stream and 14 likes. Let's get that up. And for those that are futures trading this morning on the futures, here's your good morning broadening information in the ES. Question is, pivot machine gun back down through these guys? Or do we go triangle expando, getting outside of the highs of this? Right now at this moment, we're 3 hours stuck inside of this. Only way to play this is with shares, not options. Play what? Are you talking about bank earnings? Something else. So you have to let it go green first. So NASDAQ, for example, it gaps down. In order to short that, you got to let it reverse up right here. Inside bar up, reversal up, then 2-2 down to try and get a short. 2-2 down here to try and get a short. You cannot short into new lows. Because what do we know about going into new lows? That's a broadening formation. That's like doing this. It's like if I showed you this broadening formation, that's like you shorting right here. It's like, that's really dumb. Right? Because guess what? If that changes direction, boom, now you're an outside day to the upside and you just got blown out. Versus gap into the bottom of the broadening formation. Let's say it gaps down in here. You want to let it poke green and then start going the other way. So it might look like this. The morning might open up. Let's say this is the 15 minute. 15 minute, they break it down, then they break it up. Then inside 15 here, you get the 15 down and then they take all these guys out. Notice shorting in here in the morning into new lows, broadening formation risk. Shorting here back through previous range, broadening formation magnitude to take this out. So it's the difference of timing the short at the top of the broadening formation with a combination of your broadening formation here and your actionable signal inside bar versus chasing into new lows on continuation on momentum into the bottom of the broadening formation where you're definitely going to be more likely to lose. And this is not against daily continuity. Notice when this breaks, the day goes red right away. Goes green, inside signal causes negation of the daily open right here. So the second you take this signal, it changes the day to red, and then boom, they all take a loss. So you can see this morning, NASDAQ. If you wanted to short the gap down, here it is. Anyone shorting here, they're out. Took out the morning highs. So if we're going to get a short, you'd want them to come back through all these losers in here. Anyone that's bought it, you need to see a signal break all these guys out of their positions. And this is why we say gap downs are meant for buying, gaps up are meant for selling. The only, I guess, the only exception to that rule is kicking patterns. So like here, tariff news. We had about 90% of the market twos up on SPY in here. Then 90% of the market, actually more like 100% of the market, opens two down. Everyone in here is jammed. So anytime this goes green, then red, short. Anyone long these 3 days has to get out for sure. And then boom, all those guys get out and trigger losing traders. It's the only time we're going to trade in the direction of the gap as a bias, so to speak. So you can see when that gap down happened, you had to let this go green first. And this is a little quicker in the morning. But see, it goes 2-1, so it goes green first, then 2-on-2 reversal, 2-2 reversal, puke, 2-2 reversal, puke. All right, so they sold it right away, and then they stopped some guys out. And the same thing, they came back and sold more. So we need to let it go green first versus, see this gap down here. Gaps down, ticks into new lows, broadening formation risk, right? Goes green, uh-oh, that's an outside bar, ticks them up. This was going to puke. This 2-2 would have taken out the morning lows. It didn't. So you can see they tried to change that back to red. They failed to do so, and this is gap down buy. If you shorted continuation or any of this stuff in here, you're the first loser in there, which is what we don't want. And that's why we'll normally wait for those 30-60s. Is once you get those 30-60s setting up, then we can really like hit them, so to speak. It's like SPY example, right? If we're gap down and we want to short it, you can see momentum 30 shooter if we're hitting it right in the morning. Then 2 down in green, 2-2-30 here. Flip it long, make some money on the way up. 2 up in red. This is outside bar then, reversal. Now it's going down. 2-2-2-2-2-2. Boom, you're in your short. Then you can swing it because we have the quarter, the year, the month, everything red. And they take them down. And you can see in here, same thing. They sell it initially, then they stop some guys out, then they go. Stop some guys out, then they go. Red immediately can't take the trade. It's not that you can't take it, it's just we don't want to. The biggest gap down sells occur by going green first. Let me think of one here. So like look at Coca-Cola, for example. So this is 2-2 day, right? From where? Top of the broadening formation, new high, new low, new high. Then where's it going to go? 2-2 reversal right here, new lows. Take this out, and it is. So we look at that, it gaps down, then it goes green, then it flips right here. That's when we want to take it. See if we go to the 5-minute, gaps down, boom, blows out all the shorts. 225er, you're in, never comes back. Takes them out. This is what you want because we know if this happens first, it's more likely to do the rest of that to the downside, and then it's likely to keep going. Versus if it gaps down, just goes red right away, it's probably going to come back relatively quick unless you got news or something else going on. If we go JP Morgan, or not JP Morgan, J&J, you can see this is an example of the kicker. So kicking pattern right here. Big green bars and then gap against those guys. Slight green, then red, and puke. This is what you want. So if we go in there, in this case, since it had the kicking pattern, you'll see it happened a lot quicker. It goes green, then red, and then they're in, and then it never came back. Versus if you don't have that, it's not going to be as quick. We do not have that today. LLY. Let's see. Yeah, she definitely is taking a quarter down today. Notice it's doing it on a gap down, though. Doesn't mean it can't work, but gap down, I prefer not to sell on that without a kicker. We have a kicker, then we go for it. Let's find a 10 bagger. Maybe we can get some. I think RKT could be a 10 bagger if those buyers come back this week, but that is to be determined. Strange, Alex can't hear you. I don't have my headphones on. Yeah, Sarah, if you want to be in, I don't know, did you get in? Here, let me turn my headphones on. Put them on so I can hear you. Hello? Can you hear me? Sarah? Yeah, now I can. I didn't have my headphones in before. Yeah, as far as Stat, are you still able to log into it? I haven't tried. Are you still able to log into the Stat YouTube? I haven't tried. Yeah. Yeah, no, I have the password. I saw we had some YouTube account stuff being changed around. So about 5 minutes to the open, you'll see we have 21215ers ES. Closer to taking the 2 hour down, and we have a 2 hour inside bar and down on the ES as well. But it's got to stay down there.
I sound quiet.
Here, I turned you up on the YouTube stream.
Oh,
so we had a question: how to know if a sector is strong or weak? All right, here's a good example. So we go on. You want to look at the same time frame when you're doing sector analysis. It's like this quarter. What are they doing? SPY 3-2 quarter down. Did you know about that? You did. Right below this, down 7% now from our macro vid. So what are they buying this quarter? Well, if we go to the VIX, VIX is a 2 up and it's green. That's relative strength. So this is what a relatively strong sector would look like. When we go to all the sector ETFs, which you're gonna have to give me like a minute to pull up here. I gotta get my thinkorswim going again. And I need to change the memory settings here. See if that helps or not. But so when we look at something, this is what we want to see. It's like they're obviously buying this, obviously selling this. So we already know what we're doing, right? We want to be a seller. Now, if the week goes green, then this week they're not selling, but we'll see how that plays out as we open it up. So if we compare the SPY quarter to RKT, you see this quarter on RKT, it's not a 2 up yet, but are they buying that this quarter? They are. So when the whole market crashes out, what it kind of does, we said this in premium last night, is kind of undresses the market, lets you see the good, the bad, the ugly all at once. So you can see where the weakness is. It's like things taking last year's lows. AMD. Yeah, they're wrecked, right? That's definitely weak. Now, if we go to things taking last year's highs, like, for example, Coop, which I think there's a buyout or something going on here. It's like they're still buying that. So when the whole market crashes out, you see where those institutions are actually buying and selling. So it gives you an edge in that way. So RKT, that's definitely something I want to know about this week. And if we're going to play it, it would be gap down buy potentially for a 3-2 week. We can get above this. Be 15, like 74 right there. Does that make sense? It's just obvious. If a two's up, they're buying, two's down, they're selling. And we look for two's up to buy, two's down to sell. SPY on the 2 hour inside bar, they are taking it down at least to start. MNQs or NQs, they're taking it down 2 for the PMG. Got some 3-2-1ers there. If they can stay out of that, should get the puke on as we get a little closer to the open. So when we look at this, you can see unlike the future or like the SPY, we do have a previous range on the futures to trade through. So this is the only thing we can play off of. If we're going to try to do stuff in the morning, normally that New York Open will change things though. So they normally like to counter whatever the initial move was going into that open. So we'll be watching. We'll see what we can do. But, you know, on a Monday like this with a gap, we don't have to be those first guys right away. Futures, you can play it, but we still have to figure out where the buying and the sellings are going on this week. For those...
Are you playing futures today?
Yeah.
Alex? Yeah, I am.
For those tuning in late, this is what the list looks like. Mostly staples on the downside, and then continuation, we got everything in here. All the big 7 names, all the chips, tech, banks, whole mortgage board from the macro vid. I'm playing MNQ on that 2-hour break, and if it fails, then we'll stop it out and see if I play it the other way. Here's the open. So we can see, if we go to the Qs, right gap down, right? Futures don't look too hot, but the Qs, we've got nothing to trade through as far as recently. So can that stay down for the futures guys or not? We go back to it. It's like we're lagging up a storm here with the high volumes trading. You can see at least a start. So this is that broadening formation from the inside 2-hour NASDAQ. It's got to stay below this stuff. Continuation. If it can't, then you'll get potential reclaim and they might triangle out some of these guys. So if they're going to puke, they got to stay below that to start the day. And I got to retry my thinkorswim here. Looks like we've got thinkorswim running. So let's see if they're quickening today. So you can see to start New York Open, they do tick down, but then come back into the range.
Yeah, they're taking a little profit. ES just hit its first little pivot target at 49.26. NQ hasn't.
Yeah. Now the question is, do we have reversal right now? We don't. The 5er is continuation still.
We'd actually like corrective activity here and then go again on the 5.
For those of you guys in premium, Citigroup, Morgan Stanley, XLF, GS, they all open 2s down for the financials. Looks like we tick back to red, so they go right back into triangle expando on the NASDAQ. There's some slight corrective. You can see no 5er reversal, so now go back to that 60-minute. They ticked back into this and then continued to stay in force. The question is, are we going to be weak enough to do anything just because we're still gap down selling the Qs? On the gap down buy, we see RKT going 3.360s this morning. So this week, you can see those buyers came back to buy more at a discount when it gapped down. So potentially a 3.2 RKT, and that's something I'm definitely looking for, RKT. And the way that works is we buy some position Monday. If they come back and buy tomorrow, then we'd like to buy more. And you can go like 5.16, 6.20 expiration, or you could go leaps if you're interested in that. Pfizer puts, for those in premium, there's just 550% off the monthly break, up almost 1,000 on only a $200 position for me here. So that's pretty cool. Citigroup. About 100%. I got a late entry on that one, but not too shabby. Pre-market bars. We'll look at the futures. Yeah. But I'm not going to look at pre-market SPY or pre-market stocks on anything. You can if there's, discernibly a big range pre-market. It's probably worth looking at just for, highs and lows to get your broadening information from pre-market. But that's why we look at the futures. Like if we go to the NASDAQ or the US 500, gave you the broadening information this morning off the 60. Right, the inside 2-hour reversal pivot machine gun tells you exactly what you want. Now we're still going to keep in mind the Qs, right? But at this point, the Qs still full time frame continuity down. So they haven't changed anything at this point. It just means if you're a QQQ trader, either you're trading off those futures or you're just not touching it yet. You want to see them pop up first. And on the futures, they're just taking them right away. Speaking of Dollar General, Dollar Tree has a 2-2 day up today, so those are firm. We can go and take a look at the scan sites, and we still are going to have probably some issues. See if the updates have gone through. Yeah, we got nothing enforced on the upside in the scan sites, so nothing to talk about there. TJX, let's see.
Orders submitted.
3-2 daily. Yeah, got a nice triangle in there. Starting to see follow through on those 2-hour signals futures. Just a little bit. So you can see on the ES, pivot machine gun, boom, boom, takes out the 2 of those guys to start. See if we can't flush the rest or not. Again, it's, it's kind of hit or miss just because we got that weak open starting now. But still have pretty good evidence of that seller. Same with the NASDAQ. Pivot 1, pivot 2 taken out. And you can see new high, new low, new high. Let's try to make the new low. Just don't have that help from the Qs. And it looks like I'm just having a little bit of lag in my platforms today. Not sure what it is. RKT does go 3-2 weak for the swingers. Right off the gap down by 60s. I do hard reload and see if that clears some of this up. So with RKT, the biggest thing we just want to be aware of is we got the broadening formation risk up in here. As you can see, they tick into new highs. It's got to stay up there. You stay 3-2, that's when things explode. So it's got to stay that way, and we still have all week to try and play that. That's why we like
ES.
Yeah.
Moving nice.
Is ES taking them out?
Yeah, took out the 48.95. Now we just got bottom of broadening formation down there, that double bottom.
Yeah, nice little puke and MNQ. Good stuff. Right through the triangle.
I took a little profit at 48.95 and I got a break even stop.
Let's see if I can switch over to Thinkorswim, but yeah, it looks like Coop is rev stratting as well. It's one of the other things that we see that are relatively strong. Just not sure. There's buyout rumors, so you just want to be aware. If they do buy it out and you're long, I'm not sure how that works. Haven't had to deal with that myself.
No.
Gosh, these platforms are very laggy today. Might have to do a hard restart on my computer to get that fixed.
Order filled.
Like, man, oh man. Trading View's taking like 35 seconds to load these charts. And normally, the sad part is this happens when volatility increases, which is when, we want to be more active. So I have a very good computer. So I know it's not my computer's problem. It must be just a lot of data that they're working with, bogging things down a bit. Four-hour charts are going to close out in about 18 minutes on the NASDAQ and the ES. There's some 2 up and red setups in there with a rev strat of a compound one.
ES looks weaker for sure.
Yeah, ES is definitely
Closer to
weaker.
its lows. Mhm.
You can see on ES, pivot, 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 pivot. We've taken about 4 of the 5 pivots we're looking for, actually 6 for the new lows. For the futures traders. See RTY, the IWM, same thing. See 2-hour inside bar and taking them all out. The Dow Jones, similar. 2-2 on the previous hour, and then 2 down continuation takes all these guys out. So you're getting what you want there for the futures traders this morning. For those of you guys that got the shorts on FANG last week, those are still good. 150 to 120, 30-point move. CVX, same thing. It's about 160 to 140 at this point on the gap downs last week with the Trump tariffs. Banks are going to the lows. Citigroup, Goldman Sachs, Financials, Morgan Stanley, Bank of America, all to the lows. Pfizer is also right at the lows. And now that we got Thinkorswim loaded up, I want to see who's taken out last week's highs, if any. It's probably going to be a lot of VIX and a lot of other stuff like that. So in the S&P, 0 twos up on the week. That's nuts, isn't it?
Yes. This is awesome.
Yeah, that tells you they're still just selling everything. Nothing's changed. There's some penny stocks and stuff. That's really about it. There's literally there's nothing being bought at this point that I can find you. On a daily basis, might have a little bit more, about 68 things taken last week's or yesterday's highs.
New 15er flip.
Got second 15s of the day opening up right now.
Order filled.
So with the market puking, if we're going to buy anything, we're looking for discernible trends or discernible buying, and maybe Dollar Tree, but that's an inside week, 2 down quarter. Market's still just cooked.
Top filled.
So just given the fact that nothing's changed, were you going to say something, Sarah?
I was just gonna say, hopefully we get some 5-minute activity now because it's been straight down for like an hour on the 5.
Yeah, I was going to say, since nothing's really changed, it's still just up to the intraday guys. We have no uptrends on the SPY this week. So there's not much we can do there. It's like we can watch RKT and that's really it. And lacking reversals on the day, right? Where the reversal is going to occur. They're going to be occurring on the 30, 60, 15 timeframes. The VIX is still sky high, so futures traders still have the edge, compared to options traders this week. Eventually, right? It's going to be a crowded short position, but we're waiting for it. SPY on the second 15s of the day is 225er back up. So they start selling a little bit, but pivot machine gun in the SPY. So could try and play it the other way if you're interested on the fivers. One thing that I've found, I'm not sure if anyone else does this, but if you're using TradingView at all to trade futures, like through a Tradeovate thing, I know a lot of people are using NinjaTrader and other things. Having that bid-ask line on there is very useful, just for understanding where the bid-ask is. You haven't. NASDAQ 5er magnitude hit. What does that negate creator do? It's inside 15 in green still. It's going to create maybe a hammer 2-2 reversal on the 30-minute. We'll have to see still. It's just doji at this point. Still got 12 minutes to the new 30 opens. And that means on the indexes, first 15 of the day down, second 15 opens in green. This is why we, you see why we talk about, you're shorting right at the open. The second that goes green on the 15, you have issues because you're going into exhaustion risk just straight into the lows. Anyone short's already short. So when this goes green, it's potentially a crowded trade, and you see that those shorts getting squeezed out, which is why the second 15 of the day, the second 30, the second 60, we're looking for reversals when that's the case. You can see the 225 or SPY, instantly you get a couple bucks. If you're a futures guy, a couple points. On the NASDAQ, that's 80 points in like 2 minutes. So that's what we're waiting for. And now you can see we at least get a broad information in here to start the day on SPY. New lows, new highs, these two bars, let's out of that. And potentially it's trying to make the new high a day, and then we'll have to see on that next 30 what they're up to. New fivers open, see if that confirms or negates. And if you're an options trader, the biggest thing is at this point, really, really high option prices on indexes because of that crazy high VIX. So we want to be sure when we take a trade. So if you're taking the fivers, you can, but you just got to keep that stuff tight. Looks like NASDAQ confirms the fivers up. Two up continuation. Pivot machine gun, still good. See kind of like what we talked about this morning, the SPY, they get short and then boom, all the shorts are gone now. So now what? And on my funded, I literally took a 225er on Qs, and that was 113 points. And now, if I was able to reduce and add to that, I'd just reduce and hold, but I only had one. We'll have those 30s, potential 3 in the NASDAQ now. What I did is I closed my NQ and opened some MNQ to just let it run a little bit more, risking their money instead of mine. And if we're looking at stocks, what we'd want to be doing is looking at 2215s that are 2 up on the day, or things that were already going up continuing. So RKT is already going up, but it's inside. It's not going anywhere at this point. Dollar General is already going up, or Dollar Tree, I mean. So it goes continuation when the market firms up. It's one of the few things we see 2-2 day today. Dollar Tree, that's something we can keep an eye on still. You see Citigroup firming up a little bit. But the thing is if we're going to buy 2s down, we want everything 2 down in green. We have very few 2s up today. So it's just going to be difficult to make things rally back. We'll see. As the market opens up, we'll be able to count how many 32 2s and 60s we've got. If we use the scan site, it's not going to pull up all of them right now. So we can look and see who's in force right now. I'm not sure if this will be even accurate at this point. Looks like it is. But if we go and look at the sector stats, might take a minute to update here. We'll see. I know the 3060s will update. But you'll see on the SPY fivers, sell, no reversals to enter on, 225er, boom, that's your first reversal of the day. Pivot machine gun for the futures. You got our NASDAQ on the 5-minute, 2-2. And the biggest thing is you line that up with all the pivots, boom, 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 boom. Because when that reverses, these shorts are underwater, which causes these shorts to close, causes these shorts, everyone to close.
Order canceled.
You can see why futures traders get an edge, because you got no restrictions via the trader PDT rule, and with the high VIX, doesn't matter to the futures traders. So you can see if I go to my funded today. Still have an open position. But so the current open, this is just the runner on MNQ. And then 2,000 of this is from NASDAQ, and another 1,000 was from yesterday's trading. Did have a lot of stop outs, you can see. So winning, losing trades, 30-70. But notice, and this is something important, when you look at the top step leaderboard, most people have a 1-to-1, which is wrong. You want to have very small losing trades. My largest loser, 189. My average is $70. My average winning trade is $542. When you do it this way, you can take a lot of trades, trade a lot, and if you lose, it doesn't matter. It's $70, who cares? But then when you win pretty big, right? At this point, this gross P&L hasn't updated yet because I haven't closed out the full position, but hopefully you can see how that works. So we can take NASDAQ down, maybe stop out, take it again, make a little bit, 225er, we can flip it long, right? Risk a little bit of their money and make a lot, and then it doesn't matter. And that's why it's really cool to be a futures trader, because you can do that a little quicker, easier than you can on options. Now you can see SPY, anyone short, jammed, right? If we go to the 15s, 2215 on a gap down. Starts as gap down buy. With the Qs, 15's up. The Dow is inside still. The IBM is 2 up. So if this were to stay inside on the Dow Jones, any inside bars in the Dow would confirm or negate the move we saw to the upside on the 15s across the other indexes. If this goes inside up, confirms we have more evidence on the upside. If it were to go inside down, which it's nowhere near doing, it would negate, and it'd be the first one to take out the lows because it was too weak to take the morning highs. Would you go long on what? On a 2-2 up? Yeah, no, that 225er when the new 15 opened. When you're trading the open, that second 15, second 30, second 60, that's when you look for lower time frame reversals to cause changes. So what we'd say is when this 15 opened, first 15 minutes they're selling, second 15 opens, goes green. If you were selling first 15 of the day, we don't have any evidence of that seller above 483.82. So when this goes 225er, these guys are short and people are buying. We have no evidence of a seller now. So when that changes 225er, these shorts go underwater first, which triggers these and these guys underwater. Now we get this short covering rally into the highs on a gap down. And that causes the 2215, which you could have taken right there if you're trying to play the gap down buy. Now, if we're waiting and we're being patient, we'll have 32.2s and 62.2s. If we're going to go 3 today, we'll see the whole market do this, right? And at this point, what we can do is look at all the sectors and sector ETFs to gauge, is the whole market trying to set that 30 up? So if we go in here, 2 down in green, pretty much the whole market right now is 2 down in green. So if we're going outside day, it's going to look like a 2 down in green across the whole market first. We also got the VIX and UVXY gap up sell, which is a good thing. It's a matter of those intraday participants, the 15, the 30, 60 guys, because we're 2 down week, 2 down month, 2 down quarter, 2 going 3 year. So we only have the daily group, in this case, actually on a Monday, we only have the weekly group for evidence. As those new 15s open, those new 30, 60s, we gain evidence. Second 15, we double our evidence. Second 30, we add one more time frame for evidence. Second 60, we add another time frame for evidence. And then tomorrow, the day and the week separate their opens, and we have even more evidence tomorrow. So we'll see. Could get the 3s today, potentially. We have the week day green and the 60s green, at least to start. But you can see it's like if we're going to go an outside day, we got more than enough range to work with. So we don't have to be the guys catching the low right away if we don't want to be, just because you have less evidence at the open. And what I can do here, I can switch these over. And this, if you use Thinkorswim and you haven't seen this, this is awesome. We can switch these over to the 30 here across the board. You can see here's all of our 2230 setting up today. So if these all break 2230, simultaneous break, we can buy the whole market if we want. And what we'd want to do is buy things already going up on the 30s and going up today, which is your Dollar Tree. And then the strongest stuff will be things already above yesterday's lows. So maybe Citigroup, maybe Morgan Stanley, Bank of America. Some of those guys will be a little stronger with regional banks. But we're going to scan 2s up today and see how many we got now. We got about 112. DKNG became a 2 up today. So notice, this is one of the stronger names in the market, DKNG, simply because it's taking yesterday's highs, while the rest of them are down. So if you're short any of DKNG, these guys have problems. With the Dollar Tree guys, they're having problems. FSLR is 2-2 today. GME is 3-2 day. So you got a few of those names going. Still nothing crazy as far as simultaneous breaks are concerned. It looks like we have a lot of smaller cap information technology coming back. Outside of that, it's kind of don't got much on the upside. Could be looking at car.
NQ,
What'd you say?
NQ hit high today.
NQ off the 5-minute. Nice. 225er. And look at PMG. It takes all of the shorts out. They're gone. So that's going to be $1,000 on just some running position on MNQ. And I can show you, there was a lot of scalping this morning, but MNQ, just going to close it out. And what that does now is that puts me at 4,000 on the day. And if I want to, I could still be holding for the 3,260 right here. This is going to be what on the indexes? 2,230s. So you can add to it there if you want to. Since this is a funded account, I'm just, I have a limit to how much I can make here. But now if we go and take a look at the rest of the market here, this is your second 30 of the day. And you're going to see 2 across the board indexes. That's a buy. Tech, semis, Meta, Apple, Microsoft, home builders, Google, JNUG, and the gold miners. So we have pretty much all these 2s up. What we still have yet to see is healthcares. No biotechs yet. Financials, very slightly. But at this point, gap down buy across the board. Now, we're still right near the weekly open. So if this were to fail, we'd go 2,230s down on the 60 flip and negate, take out the morning lows. So it has to stay up there. And this is why, beginning of the week, you just got to be aware you have less evidence. So you can always go smaller. If we're going to go outside day, you don't need a lot if it's going to do that. Right? We don't have to risk, a ton of money to do that. When we go to the futures, you see the scenario 3. This is a broadening formation, which makes high day even more important. Because if we were to fail it, which right now you can see slight 2 up in red. If we were to go 5ers, 15ers back down, could go 3-3 and take them all out again. Or if we go to the 5-minute, you'd see the broadening formation here. Our 225er on the 15 change, new lows and then back up, and then new highs. That goes 5ers back down. It could try and change again, go all the way through it. And right now, I don't think we're actually going to be able to scan on the scan site because we haven't gotten the updates yet for the 2 down in green setup. But if we go to the 30s, S&P 500, we only had about 190 names take out the morning highs. The rest 270 names went 2 down and then 1. So we don't even have half of the market firming up on that 30. So we have some, but we want to see kind of like we saw last week when the market cratered, we want to see 95% of the market reversing on those 30s if we're going to get a really big hard move. So at least to start, not seeing really definitive signs of that buying there.
Order filled. Stop filled.
Oh,
Order stop filled.
So you can see at least to start the new 30s, NASDAQ does go 223 minute, but I'm just going to be holding off on that for now. Thumbs up on the live to get the alcos going. But do you guys see how it works as far as what we're seeing intraday? We do see Pfizer on the gap down a little bit more firm. 230s. Let's see, Citigroup doesn't do much, but it is 30s back up, at least to start. I'm going to continue to just keep an eye on how many 30s we've got. Looks like about 3 more 30s took out the morning highs, so still not much change there. Let's go to that SPY 15. So you can see 15 down, 15 up, short covering. Now, when we look at this, what we're doing is we're looking at positioning, right? These guys bought it, right? Their stops are against this stuff. We're nowhere near taking those guys out. So how are we going to take that out if we're going to? We need signals, like a 2-2 with a magnitude to take it. The other thing, though, is if you're short in yesterday's range, you're short against obvious pivots or where you got in. Where you got in is anywhere above yesterday's lows. So 505.07. We haven't reclaimed that. So if you're short yesterday, you're sitting pretty. You don't have to do anything. If you're short this morning, you got squeezed out here. If you're long this morning, you don't got to stop out of anything. It's no reversal against. So now we're kind of in limbo here, right in the middle. So we need new broadening formations to make stuff happen. You'll see it's like slight red and then 2-2-1ers. Maybe we can take these guys out. And then we'll have one we can work with here. Something. Maybe something like this. New highs, new lows, new highs. Learning a lot. Good. And if you're like, hey, Alex, this is really fast. It slows down, and as the week goes on, we're going to get more 60s and 30s. And last week, kind of while we're waiting, you do have simultaneous 30s, so you could be playing that, just waiting on the 30 reversal again. Just right now, we got no one to take out at this point. But we go to last week, we had a lot of really good 30s and 60s last week. It's like you can see almost every reversal. 2-2 up, 2-2 down, 2-2 up, 2 down, 2 up on a gap down, all the way up, 2-2 down, inside up at the close, get some profit in there. And then even in here, 2-2 up, make some money, 3-2 down, make some money. Then in here is a little bit more difficult, but you'll see 2's up, which does give a little bit of profit, then comes back, 2-2 down, takes out the morning lows, right? So as the week goes on, we're going to get a lot more setups to play off of. We just don't have weekly signals. And if you watch that nightly/weekend vid, no weekly signals, it just means those intraday guys are what we care about.
Subfill.
It's weird on Trade of 8. On Trade of 8, it shows Sunday trades as yesterday, but it shows my today P&L as yesterday plus today. Not sure if they can fix that. That'd be nice. Yeah, Austin's making a good point too. The more you know about the strat, as far as scenarios are concerned, that it slows it down as well, kind of in your brain. Because if we say 2-2-30 simultaneous break, you know exactly what you're looking at without even looking at the chart, which is a beautiful thing. So my final stats for the morning, I'm probably not going to touch more on the futures, but biggest loss was $189. Average was 70. Biggest win was 1.8. The average was 600. And that's why volatility is beautiful, because you're either right or you're wrong right away. So you can see SPY, although they tick up on the 30s, right now the sellers, are more aggressive, although the buyers have control. So whenever you're 2 up, you're trending up. But if you're 2 up in red, you're trending up, but the sellers have control. So right now, since it's a doji, do we have any evidence really of a buyer right now? Not really. It's like it's just doing nothing. Inside 5. How do you keep a tight stop? Well, for example, like when volatility is high, things just go. So you can buy, you can see this inside fiver, they broke and confirmed the 30. So there's your 30 simultaneous break starting to kick in a little bit on SPY. When this goes 225er, it should really just go right away, because you have shorts that are short with their stops here and against where they got in. And there's a buyer taking the offer. What does that mean? The bids are going to lift and the offers are going to lift, which you can see like right now. If we pull up here off your simultaneous 30 signal, you go to symbol trading scales and lines. Here it is. But what happens is this breaks, right? These guys are short. Where are their stops? They're against this. And now SPY takes and reclaims yesterday's lows. That's potential outside day SPY. So it's like, boom, instant winning trade and you're in, right? Now, because of that, anyone short in yesterday's range, they're going to start stopping out. So we should just go tick, 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 all the way up, because you're pairing an aggressive buyer, this buyer that's buying 4% above the open today, with sellers who are short. So you can see, how do you keep a tight stop? You go to the 1 minute. On this fiver signal and this inside fiver signal, what happened? It broke and the oneer never came back. So if you're a 5 minute guy, you can risk here 0.7, 70 cents on SPY. How far does that go? It goes $10. When this fiver breaks, you can either risk the low of that or even tighten it up. It's like $4.95. You can risk like 70 cents again or $1. And how far does that go? $12 right away. And boom, winning trade, reduce. When this oneer starts coming back, you can reduce it a little bit, or you can just hold. It's up to you. But the biggest thing is, once you're in a winning trade, you don't have to close it. And that's why when you look at a stratter's statistics, you're going to notice the losing rate does not matter, because we're going for home runs. We're not going for 1-to-1. We're not going for any of that. So if we tight stop in, we're losing like $70, 100 or $200 at most. Once we hit a winner, we're in, and we know we don't have to get out if we don't want to. So like if I was going swinging for the fences, we saw on NASDAQ, we go to that 5 minute. Oops. The headline doesn't matter. Let's go and take a look. How many of those inside bars just broke up on the 30s? 200 of them. So how many went 2 down, 2 up on the flip? On the 30 minute. Out of the whole market, 416 of the 500 stocks in the SPY went 2-2-30. What's that? Simultaneous break buy. But you can see the 5 minute, 2-2 here. Once it goes boom, you're in, right? You don't have to get out. So when this goes inside 5 up, you add to it and then boom, you stopped out $100 here, there, $100 here. This is a $10,000 trade on the futures, right? So that's why the tight stops matter and why we can have the tight ones. When volatility increases, right? This is the stuff you can get. 225er off the lows. We mentioned that, did we not? And then inside fiver, we're talking about that as well. We just kind of missed that break. But we talked about your 30. 2-2-30 SPY. Boom. All the shorts yesterday, take them out. Gap down buy. And like we said, when we talk about risk management on simultaneous breaks, if it doesn't reverse the 30, you get to hold it. So notice SPY, Qs, IBM, Dow Jones all went 2230. Then they all went 5-hour signals confirming that. Notice the whole market, regional banks, financials, healthcares, biotechs, Apple, regionals, Microsoft, Meta, home builders, energies, Google, JNUG, GDX, all 2230. Now, does this mean we're going to rally the whole week or anything like that? No, we have 30 minutes for this break. So instantly, boom, winning position. And now you can do what you want, right? If you had stronger stuff that's 2 up on the day that you're in, those things probably aren't coming back. Now, these ones, we don't know, right? We'll see the outside days potentially. And then after that, we're not sure. But you'll see your 2-2 30-minute magnitude. 2-2 SPY, boom. These 2 bars go outside of the previous bar. 3-2-2, that's where it's supposed to go. And now we don't know. Right, either that's going to keep going or it's not, but you made a lot of money on that if you played your simultaneous break correctly. 10K and an Apex 150K pass just like that. What the fuck's going on? That's called a VIX being high and a gap down buy on a Monday. But you can see if we go to NASDAQ, back to the 60-minute, that's scenario 3. If we were playing, you can see the 3 hammer, 3-2. For playing that with tight stops, when we go into the lower time frame, like a 3-minute or a 1-minute, when this goes 2-2 reversal, we can hold it if that doesn't reverse against us. Or we can use that same 5-minute inside bar to play off of it. But it's like you take it, stop out a little bit, take it, stop out a little bit, take it, gone. Right? Maybe you lost 100 points here and then you made all of it back and then some with an 800-point move. So it doesn't matter. As long as your analysis is correct and based on the universal truths of the strat, you're good. EU said it's ready to make a deal. Perfect. Yeah, these charts are still laggy, but man, quite the gap down buy. You got pretty much the whole S&P 500 to 230 on the gap down. They're gone. Even the silver, gold, everything. And we've been harping on it. If you've been on Twitter, we've been harping on the simultaneous breaks. Is that Thinkorswim? Yes, it is. All right, Q's outside day. IBM already a 3, Dow and SPY. They should be finishing that out for you shortly. It's beautiful stuff. And now guess what? If you grab your simultaneous 30s, you're good for the day. Now you're in. You can do what you want. Go golf. Go do anything you want. It doesn't matter. But do you see how fast it goes when those simultaneous breaks start lining up and kick in? Some beautiful, beautiful stuff. Appreciate the miner. Wait for that signal on the 30. Find a 5-hour signal. Get in and confirm. Nice. Now, the biggest thing is we don't let green go red. Right? So if you take simultaneous break, you buy any of the market. Doesn't matter what you bought. Pretty much went up. Or you shorted the VIX. Now that you get this big winning trade, what we do is we reduce or we hold. But we never let it go red. So if, let's say you're a SPY trader. 496.27, you bought it. It's trading 520. You don't have to get out until that 30 reverses. That's good as far as we're concerned. But if you reduce it, you can guarantee a win. You can bump your stop to where you got it or to the daily open. Say, if the day is green today, I want to be in because they're buying today. And that's how we create winning trades and then hold. So you can do what you want with it. It's up to you guys. When it comes to relative strength and weakness, If we go and take a look at our stronger names, DKNG, you'll see daily magnitudes hit. Boom. Right off the 3-2-30s, confirming the market. It was already going up. Scenario 3 on the 30, then went 2. It's still going up. The whole market reverses. Anything already going up must be stronger. So it's expected to continue, and it did. This causes a weekly reversal, but it's got to hold that. It'd be above 34.96. Then we can start talking about taking out 40.97. We go to Dollar Tree. Dollar Tree on the 2-2 day, same thing. It was already going up. So when a simultaneous break to the upside occurs, it should just keep going, and it does. And we still have a daily broadening formation to 79.34. They can take it up there. And if we go to RKT, it was already going up, but they didn't confirm that. Notice the inside 30, so it never went 2. So at this point, we still just don't have any evidence here in RKT of a buyer right now. It does look like you're getting some profit taken on the indexes. So they spike them up and take a little bit of profit. So manage it how you'd like, but that's a pretty good trade to start the week. Yeah, so you can see some of our members here. This is one of our favorite 0DTE traders in there. 1,500%. Not sure if he bought the 30s up, but he probably got the 5ers at low day and knowing him. But very good stuff. This is the beauty in knowing the strat. I don't... Yeah, midnight. He kills it. And you see they're taking their profit from magnitude on the 30 SPY, so getting a little bit of that upper wick. And what we call that is buyer exhaustion. They go right into the highs, then they're done. You can see it goes for, what, 9 minutes. So now, this is what we mean when we say don't short the gap down, right? 2215's up, 30's up, boom, boom. Now, if you're going to short it, 2215 down, and you already took their money. So if you made this on the way up, when this goes 15ers, about 9 minutes, 2215 down, you can risk their money. You made 2,000 on the way up, you can risk 500 on the trade down, maybe quadruple your profits if that works. And if it doesn't, so be it, right? You already took their money. And that's up to the trader if you want to play what we call country western. Country to the upside and then western back down. And midnight's already done for the day. I agree with that sentiment, but we still got high VIX. So at 15, we're going to be watching that pretty closely. You already had the shooter 5er kicking in. Now, the thing with country western is you just have slightly less evidence because at this point, the day's bright green. Now, the 15's reversal, you have that for 15 minutes to try and change it. It's just got to work. And then you might have a 30 to change it. Just got to work. That was a gift. Difficulty with trading view. It was a little laggy for me this morning. Not going to lie. But look at this. The 5ers are $5. Your 5-minute chart is your daily chart at this point on the indexes. And that means every 5 minutes a new day until that volatility starts drying up. NQ and the 30 and 60 were red. Yeah, we take signals back through previous range when we get new evidence, such as a new open. So on the second 15 of the week, the weekly open separates from the daily open. So let me show you how this works. So NQ, we already talked about, like, why do you not want to buy a gap down? So let's say this is our broadening formation. And then it gaps down in here. Why do we not want to sell a gap down? Because if you're short, you get what you want. Market's going down. So shorts don't have to do anything when that happens. And if you're long, you're already out. Is we're taking out the previous lows. So if we gap it down into here and continue gapping, what's happening is we're just going into new lows. So this is broadening formation risk. So even if it does go red to start, we prefer to go the other way because then we can come back through these shorts and take, what we would call a crowded short trade and stop everyone out, which just happened. And then we can take it the other way. We cannot short a gap down. It must go green and then go red. Right now at this point, because they're still bringing them in on the SPY here, but The reason that is because of the crowded trade. It's like everyone's short. So the first guys that go to cover, when we start reclaiming previous lows, these shorts guys got to cover. And then these shorts have to start covering. And it might go take everyone out, which is what we saw today. They just take everyone out. And then it'll go back down if they're still going. So when it comes to how we enter that, if the new week and new day open at the same time, the first 15 minutes, this is a 15 chart, we only have the day, or we only have the weekly open we're playing with. The next 15 opens, if it goes green, it gives us more evidence. So when this goes green, it's now going the other way. There's shorts that are short and it's going the other way because the buyers are taking the offer above this. So what does that do? It causes these shorts to go underwater. And then since we know the daily time frame is a gap down, it can turn into gap down buy like we saw. Then if we're going to go for shorts back down, we want to see the 2-2 reversal back through all of these guys who are long. It's all about taking the previous guys, long or short, into a losing position. And that's why our trades move so quick. That 2-2-30, it's like 30 points in 9 minutes, right? And then it comes the other way. Outside day Qs and IBM, they're coming the other way to try and take out the lows again. So when those opens matters. And that's why continuity is important to know. It can change because control changes when the new opens occur. A 60 could be red. The new 60 opens goes green. Control has changed when that occurs. And that's what causes losing trades. So we want to know when those opens happen. So now if we go to the SPY, we're going to have an inside fiver potentially setting up. Maybe a 2-2-15 back down. And the magnitude of that would be this first, 493.26. And then potentially the morning lows. Now, as far as I'm concerned, the easy trade was the gap down buy. And now this is country western. If you made some money, you can try that the other way. If not, you can wait for the next 30 setup. If we're going to really smack them, it would be going red below this from the 15s, and then we'd go 2-2-2-30s. But for now, we're still 2-2-30s up. Is a 2 up going 3 down tradable? Yes, it is. The thing is with threes. So like if we go to Qs, today's is just a perfect teaching moment for this. In order to get a 3, it must be 2 down and green first. Now, if it's 2 down but green, the sellers are still in control. So although this was green and going up, the sellers were in control as it was making lower highs and lower lows till we took out yesterday's highs. And that gave us our outside bar. So in order to give the buyers control, you must have a lower time frame to the potential 3 that goes 2 up to give the buyers control. So notice the first 2 down in green, the sellers have control, but the buyers are more aggressive. It's a lower high and a lower low, but it's going higher. It's above its open. So what's happening is we have a downtrend, but the buyers are more aggressive while it's trending lower. When this goes 2 up above 417.48, the buyers have control as we're making higher lows and higher highs above that. And they're more aggressive because today it's green and right now on the 30 it's green, which will give you the outside bar of the higher time frame. So when we look at it, and this is why we say we can hold off. We don't have to be the first one in there. The 2-2-30 got you in there perfect. So if we look at it like this, in order to get a scenario 3 to the upside, it must make a new low, then reverse by reversing on a lower time frame first to change this time frame open. Then it will go scenario 3. So if this is a daily chart, the 15-minute chart might look something like this. Let's say the previous day looked like this. The 15, we'll say it gapped down in this case in the morning. It goes down initially. Then it changes continuity right here, which then changes the daily open. The day opens here. But on a 30 basis, you'll see, if we're looking at 30s, this would be outside 30, 2 down on the 30, 2 down on the 30. And then this is still 2 down on the 30 minute. When this goes 2 up here, now we are 2 down, 2 up 30 minute. And we're back through a range of shorts. So we change control and then boom, these bars go outside of all of this and there's your broadening formation. So the 2 down in green gives you that broadening formation where these are outside of that. So when we look at a chart, what we say is this. We want a big broadening formation. Something like this. And then if this signal occurs with no reversal against us, it will take the other side of the range. So when we see this hammer set up, we draw from right to left. If that works with no reversal against, it will take that out. So if we go 2 up, 1, 2 up, 2 up, all of these bars become a 3 or an outside bar to this, which is broadening formation. Now the question then is, how much evidence do you have when this breaks? That's where the simultaneous break comes in. If you have a simultaneous break where every index is a reversal at the same time, then at that point, we have no evidence of a seller and we have evidence of algorithmic buying, where every index is being bought as a reversal at the same time. We pair that up with these guys who are still short, either where they got in, they'll have their stops, or against obvious pivots, such as the previous highs. And those shorts are forced to cover while we have algorithmic buying going on across the whole market. So we get this big explosive move. And given the simultaneous break, giving us high evidence to say definitively that's what's occurring right now, our stop is a reversal against us. So if this was going to fail, it'd look like this. 2's up, goes nowhere, and then 2 down, we get out right here. Versus this goes 2's up, goes instantly, and then does not reverse against us. We trail our stop up, 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 till we take this out. Once this is taken out, we defend our position either, like if we see a 2 up in red, then we get out. If we see a 2-2 reversal, then we get out. Versus in here, as it's still going up, if it's 2 up in red, we call it corrective. If it's inside in red, we call that corrective. So when we go and take a look at the SPY or the Qs, this 2230 causes the 3. Once it hits the magnitude, it's no longer corrective. It's profit taking from the outside bar target. So you can see it starts coming back in. All of the longs in here are now in a losing position to all the shorts that are entering here off high day. You'll see oneers all the way up, 2-2 oneer, boom. Anyone long in here takes them out. Then it continues, inside down, continue. Takes out a ton of these guys. Now at this point, with the new 60 opening, we're at 1. We're not touching that. We're done for the day, right? At this point, unless we can take out the morning highs or lows, we're going to start a new broadening formation in here, and everyone with their funded accounts who's like, I missed the move, they're going to lose all their money right in the middle of this range because we're not going anywhere. Because remember, in order to have control, we have to be a 2 up or a 2 down. Right now, it's a 3-1. Now, sometimes we will see this go 3-2 and take them up, but even in order to do that, we have to have control on a lower time frame. So right now, the 15 is 2 down. It's green, so it's rejecting. But do we have control to the buyers on the 15? We don't. It's just green. We go to the 5-minute. The 5 minutes a 2 down, but green. Do we have control to the buyers right now? We don't. Still going 2 down. Now we switch all the way to the 1 minute. That's the only place you have a 2 up. So we only have those oneers helping us out here, which is less evidence than we prefer to see. New to trading, are you swing? We do everything. We do investments, swing trading, all of it. Scalping, doesn't matter. But if the institutions are selling, who's buying? Well, the thing is at any point, you're going to have different... Weird. Is my... Oh, here it is. Yeah, so at any point, you're going to have different participants doing different things for different reasons. It's like right now, you could have a hedge fund who's buying the SPY back because they sold it earlier and they want to get back in, right? And that's going to show up on your 1 minute. You can see 2 up oneer, 2 up oneer, they're buying right now, as far as we know, on a 1 minute basis, which changes every minute. Now, there's also other people who are selling the SPY because they want to buy something else, right? So they're buying and selling for different reasons. What matters is who's buying or selling right now. And that's where the strat comes in. It tells you who's doing that right now, and do you have a signal to make that happen? So like this morning, when the day was green, they're buying today. Above that daily open, above the morning highs. Then when the 5 minute goes inside up, everything was a 2-2 reversal on a 30-minute basis. They're buying the whole market right then and there. And then all the shorts have a problem.
Yes.
Right now at this point, we're still seeing the 2s going 3. We go to a 3 minute, you'll see 2-2 3 minute back through a range. So they're taking some of these guys out. We're gonna have a broadening formation in here now. So here's your broadening formation starting from your inside 60. Notice these 2 go outside of that. Now they're stuck in the middle. We go to the 1 minute. See new highs and new lows right in the middle of the morning range. So we're just going to hold off. But there's people buying and selling for different reasons. The thing is it doesn't matter why they're buying or selling. And I met with, by chance, I was talking to some algorithmic traders like quant funds, and they manage like hundreds of millions of dollars. I got to talk to them about the Strat. They didn't like it. But my whole point when I was talking to them was, so at the end of the day, what are you doing after you do your analysis? They're like, well, we buy and we create positions. It's like, we do our analysis, we're going to sell short or buy long here. This is our invalidation. That's how we play it. And they're doing like high frequency trading stuff. And I was like, okay, well, if you buy and take the offer and you do it on a 15-minute basis, like I open my chart and you do it within this 15 minutes, if you buy and take the offer and you're buying 1,000 contracts of ES, the 15-minute has to go green. You're taking the offer, you're removing the liquidity. It has to do that. They're like, yes. It's like, okay, well, the analysis you do does not matter then. Because at the end of the day, the only thing you can actually know is, are they buying or selling right now? Are they doing it aggressively? Or are they sitting on the bid or sitting on the offer, not aggressive? And then what are the conditions of all the timeframes? Are they doing it right now today, but this week they're not? Are they doing it right now today, but this month they're not? Or are they doing it this month, this year, this quarter, this week, today, and right now? And that's how you get the amount of evidence to be high for the direction of your trades. So like when we go to the 5-minute, people will say, this was a 5-minute against daily continuity, which is correct. But it's a 5-minute in the direction of the 2-down week. It's a 5-minute back in the direction of a bright red 2-down month where the sellers are more aggressive this month. And also, while we're talking here, 3-2 shooter 5 Qs. If you can get out of that below 417.59, you could get the puke back on right here with the 5-minute PMG down and left. But to my point here, if we go to the quarter, this quarter they're selling. If we go to the year, this year is not a scenario 3 yet. They're selling this year and we have a target 395.34. So if we zoom out, if this 5-minute works, 395.34, that's what we'd like to take out. As long as this 3-2 stays 2 down, would be good. At this point, we're still in inside 60 though, which is the thing we just have to be aware of. We're stuck in the middle of the range. If that doesn't work, they're just chopping them up still. But you can see the amount of evidence you have is like when this 5-minute breaks, you have for 5 minutes control to the weekly sellers. Is this trending down this week? To the month, quarter, and yearly sellers. These sellers this year, this quarter, and this month, probably more strong than whatever the previous 30 guys did. Because 30 only lasts 30 minutes, right? The 5-minute with all these timeframes could last the rest of the year, the rest of the quarter, the rest of the month. So it's important to know how much evidence do you have when that is occurring. It doesn't matter who's buying or selling or for what reasons. It's just, are they buying or selling right now? And how much evidence do I have of that? And if we do that, are we going back through a range of longs to the downside? Are we going to stop them out and speed things up? Yeah, so we're still in inside 60. In order to get out of an inside bar, you need to expand the broadening formation that's being created. Whenever you go inside, you create this broadening formation. So we see the Qs inside 60. It starts this on the 1-minute. Lower low, 3-2, 2-2, 2-2 reversal. Where's that going to go? New lows to this, given no reversal against. They do. These bars go outside of all of these to the left. So this right here is your broadening formation. This is outside of this. So this is a scenario 3 to these bars here. Given we're still a 1, it's more likely to tick down and then come back through. If it can tick down and stay down, though, it will expand. If we're patient, we'd prefer to just not trade this, because what's most likely to happen is we'll go down and up and down and up. Then once we get a scenario 2, so let's say we go 3-1-2 to the downside, then we'll have a magnitude to take low a day. Versus right now, it has to stay, we would say, below this. 417.87. If you can stay below that and stay 2s down, then we could try and get the lows again. Just a matter of, are the sellers still here or not, right? As far as right now on the 30, we have evidence right now on the 30-60. We have evidence this month, this quarter, this year. Control is to the sellers this week. And we already have 3 on the day, so we're trying to come back through it again. But we're scenario 160. So the 60 has no control. The 30 still has no control. It's still a 1. The 15 has control, and that closes out in 6 minutes. So we have 6 more minutes of this 2 down 15. New 15 needs to open. We need that 32 down. We need the 15s 2 down to give the control to the seller still. White House confirms rumors of a 90-day tariff pause are fake news. So the news that caused us to rally is gone, which probably means we'll go outside year today. 395.34 on the Qs. $250 in 1 minute on the country western. Cool stuff. Notice today though, right? Fiverr's up. I added to it, then I reduced. Or actually I fully exited just because I funded. Once I hit, I think it's what, 10,000 or something, then that's the max I can make this week. But you'll see inside up, boom, Fivers, 2-2 here, inside bar add here, 2-2 Fiver here, flip it short, boom. And there's still 2 down, 2 down, 2 down, 2 down, or maybe it's 1 right here, equal lows. But this Fiver was good all the way to here, and this Fiver's good all the way to right now, still going. So when volatility increases, that 5 minute is the daily chart. It's just crazy stuff. We had a 1,000-point rally in less than 10 minutes. And then we had at 7, from high day, we had a 1,200-point puke in 20 minutes. It's like, you're getting monthly moves in an hour. Like, this is amazing, right? For traders. When you trade the strat, when volatility is low, it's kind of like the training ground where, like, you can see on the weekly basis SPY, it's like, you're still getting good moves, right? 20 points here and there. But then once it increases, right, you're getting 50, 60 point moves a week. All the training you've done is for then and there when the VIX is high. Because every single reversal, if you manage it properly, you can play for the most part. And it looks like right now in the SPY, you might get some 3-2-1ers. Try and get them expanding. Curious if they investigate the reporters' long positions in the market. That's funny. Yeah, so the news is doesn't matter. Rob would always say, "What's the news? What's the news? What's the news?" 2-2 reversal on the 30, 2-2 on the 15. We already talked about the news before it happened. The news simply drives price to where we know it's trying to go, or changes what price is doing and then causes scenario 3s. Those are only 2 outcomes. So if the news was going to be bad, we'd tick up and we'd probably have 15ers, 10ers back down, take out the morning lows. If it's good, our 2-2-30s are still good. So it's always what's price doing, never the news, because the news cannot pay you money for being correct on what the news says. It's only what the price does that matters. And a 2-2-30 on a gap down buy simultaneously with 444 SPY names doing it is going to cause outside days. That's the news. $1:55 a.m. scenario 3. I blew my funded account. Let's see. What are you talking about? Are you talking about the opening 3 this morning? Where I don't see any 3s at one in the 5 minute 3. Yes, so broadening formations are always drawn based on outside bars, and we always expand those in the direction of control. So I'm going to answer that question. Can you try and be more specific? Are you talking about this 3 right now at 9:30 on ES? Like, tell me in CST. It's 1:55 a.m. See, I'm in CST, so I need to know New York time. Okay. 1:15, 1:55 a.m. So the first thing is you shouldn't be blowing your funded account on this. But the second is what happened? Well, here's your scenario 3, and I'll get to your next question that I saw in the chat. 3, that's a broadening formation. New lows, we can't shorten to new lows. New lows again, can't shorten to new lows. 3 reversal above that. And then you can expect 3-2 continuation. Boom. These 3 bars, outside bar to the outside bar. We draw right to left to include all the data. Looks like this now. Then it ticks up. We draw right to left. When that goes red, this is your broadening formation. So 2-2 reversal, given no scenario 2 against. So as long as there's lower highs here, we're going to take this out, which it does. See, lower high, lower high, lower high, boom, takes them out. Then they tick up slightly. So you could have reduced position here if you're short from this stuff. And then it goes expansion. Once it gets out of this, until it reverses, it's expanding. 2, 2, 2, 2, 2, 2, 2 against right here. You get out or reduce. So triangle down, triangle up, triangle down. So you could long it up, flip it short. Maybe you made no money on the long. Maybe you made some. Flip it short, hold it, make some, reduce. 3, 2, you can add back or hold. 2, 2, 2, 2, 2, 2, 2. Right here, get out. And if you're playing previously, you'll see this was the broadening formation, new low, 3, 2, 2, boom. 3, 2, boom. 3, 2, 2 reversal, short. 2, 2, 2, 2, 1, 2 down. So you make some money, goes reversal here, reduce. 3, 2, 2, reduce or get out. So you made some money off of that. And then maybe you try it up and try it back down, you make a lot of money. Previous broadening formation was true. The broadening formation is always based on what's happening right now. So when this goes 2 up in red, the second that happens, you're drawing right to left here. This is your broadening formation stuck inside of this broadening formation. Same way today, when the new 15 opens and the 5ers go reversal, this 2-2 reversal, boom, we start drawing it. It's now telling us about this broadening formation. And you can see 2-2 5er, no reversal against. Where's it going to go? Up there. And then shooter 5er at the highs, boom, right back in. That makes sense? Now, as far as we had a question about drawing the broadening formation, it's always drawn on scenario 3s. There's only 2 ways you can have a scenario 3. We can have either scenario 3, 1 bar, or 2 or more bars to make a scenario 3. So this is a broadening formation every time. We're drawn right to left, which means, let's say we reclaim it, we're looking to broaden again every time. And if we can stay out of that, we're looking to expand the broadening formation. So let's say we do this. Once it ticks the lows out, if that stays down there, oh yeah, we're going to keep expanding it. Because they broaden. You go tick, 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 boom, broaden, and they just get wrecked. Now, as far as the compound 3, this is the other way we see it. Let's say this is a 60-minute outside bar broadening formation. On a 30-minute chart, it would look like this. You'd have 30s up, 2-2-30 down. So on a 30 chart, this is your outside 60. These 2 bars are this outside bar here. It's just 2 bars instead of 1. So what we say is these 2 bars went outside of these 2 bars. So your broadening formation is drawn like this. The same way this broadening formation is drawn like this. When we see a signal is when we want to draw that, because we can expect it to occur. So this shooter forms, we say below this, that's a short. The magnitude is to take this out, to go outside 60 minute. Now let's say we're on a 5-minute chart. It might look like this. All of these bars are an outside bar to all of these bars. The same way these 2 bars are outside bar to these 2 bars, the same way this bar is outside bar to the previous bar. So this is your broadening formation in here. It's the same thing. So when we look at a signal, when this goes 2 up in red 5-minute, we don't have one to draw out, but we have all these pivots to take out. So we can say if we trigger this, we might trigger this, which might trigger this, which might trigger this, and so on. So you can take it here, and then boom, broadening formation. You'll see it sets up. Then we go 2-2 up. So at that point, it did change, and it sets this up. Here's your broadening formation. But if this goes 2 up, 2 down, what are we doing? We're going into broadening formation expansion. So if we can get below this, you're going to expand, and you're going to take out all of these pivots here and remove liquidity, which causes price to speed up. So we're always drawing them out on the 60-day, week, and month timeframes. And when things go lower, So such as like in here on the 5, 15, 30 minutes, we're doing the same thing. So each new 15 minutes, we draw them out. So to start the open, we had the first broadening formation in the morning here. Is this broadening formation? Broadening formation. New low, you'll see the 2-2 here, boom. 2-2 here, boom. Then threes, take them out. Then we had the inside 15 down this morning. 2 down, boom. Makes the new low. When this goes green, second 15 of the day and firms up, we have to redraw our broadening formation. So we can keep this one drawn out because that's still true. But the current broadening formation, we made a new low, and then it went green here. When this goes 2-2 reversal here, it's now going to the other side of that range because now these 3 bars go outside of all of the bars left in here from this low to this previous high. So you can see they gave control to the bigger triangle in here, then changed control to the buyers, which gave us this smaller triangle, which we can still play off of. So it's a matter of consistently drawing them out. If we go to SPY, we will see we didn't have much of a broadening formation in here this morning. But when this goes green on the day, on a gap down, we can start drawing this right to left. In this case, like it's going to look kind of crazy. We had like a 3 minute. But you can see, so yesterday's broadening formation looked like this. Notice they gap down, expand it. Then it reverses here on the 3 minute. We can draw right to left. And what we would say is, you can see all of these bars are outside of all of these bars, right? Which is not as clear. On the futures, it's more clear. But this goes reversal. Given no reversal against us, all of these bars go outside of all of this stuff on the left. So it's just constantly broadening every time. And you can see, if we go to the NASDAQ again, we talked about this 1 minute broadening formation. How do you play that? Right here. Take it out, draw it out. Looks like this. So they make the new low, we can draw it here. Then it need new low, new low, new low, draw, draw, draw. 1-3-1. When this signal sets up, we draw this. If that breaks, we have a pivot machine gun. These guys to take out. So if this works, we're going to take these guys out pretty quick. Boom, boom, boom. Takes them all out. Then we lack pivots. So you get profit takers. 2-2. You could decide to draw broadening formation off that. It would look something like this, right? But for 1 minute, they take it down. Then they go 2-2 back up. What's that doing? Reconfirming this bigger broadening formation. So if this doesn't reverse against us, we would like to see us get outside of this one, what we would call sub triangle. Right here, you can see it's acting as support. And then we would like to take out the top of this broadening formation. So you can see new lows, new highs, new lows, slight higher highs to these guys, goes down a little bit, takes some guys out. 2-2, this is trying to make new highs still. So in the series, new low, new high, new low. The next high in the series would be up here. Does it always hit it? No. But that's why we don't hold trades that reverse against us. We buy the reversal. We trail our stop up. When it reverses against, we reduce our position. Then we have an instant winning trade. We're in. Then when it goes 2-2 here, we add back to our winning position and we get another instant winning trade. We're in. And then if it's going to go, it won't reverse. If it's not going to go, it'll reverse against us. So given no reversal, it will take this out. If it does reverse, it changes what we know. So let's say this goes inside oneer. We could draw this out like this. We'd have this triangle and we'd have this one. You'll see at this point, new low, new high. So if this went inside down, it'd be trying to take this out. Then we'll have to see, right? Does it stay down there or do we come all the way back through again? If it goes inside up, it's expanding this broadening formation here. You can see these 4 bars outside of these 3. If it goes inside up, your expansion. So, you know, we're not going to see it on a higher time frame, which is why we draw them out. But, you know, it's all about confirming and negating. Is stop based on previous candle. It depends how you're trading it. When we take an inside bar continuation, for example, we're going to use the low of that bar. If we have high volatility and a very aggressive buyer or seller, which we do today, we can go tighter than that. Like we could bump our stop up into here. You just have to be willing to get back in. In the case of a oneer, you only have 1 minute to trade it. So you're not going to have as much time to, you know, mess around getting in and out. When it comes to like a 60 minute, right, you're going to have more time. You can trade those lower time frame signals to confirm the 60. So in the direction of the 60 minute or to negate it in the opposite direction. As far as the stop though, reversal against is the ideal stop. So like if we go inside 1 minute up, we can use the low of the bar we enter on here. And then we can trail our stop, boom, boom, boom. And then it takes us out, we reduce by half. And now our break-even price is low day. Or not low day, but right here. So now we're good. And 2-2 here, we're in. Our stop can be the low of the bar we enter on here. Trail, 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 trail. Inside bar, we can add, trail, trail. And now we have, you can see 1 trade, reduce, 2 trades, add back, inside bar, add more. And now you'll see we've made the new slight higher high to this. So we've finished the triangle. New highs, new lows, new highs. These bars all go outside of all these bars on the left. And if we go to a 15-minute, 222. So the magnitude of this 15-minute is to do what? These 2 bars outside of that. If this works, we'd take out the morning highs. It's got a lot of distance to do that. So it's up to the aggressiveness of those buyers. But you can see, like, we go to the 3-minute NASDAQ. 2-2, these 2 bars go outside of these 2. 2-2 here, you're in. 2-2-2, momentum hammer, 2. This is still good. Right here, you're in. 74 points of risk, 500 points of reward so far. And if you're using the 1 minute, like we've shown you, it's like entry, reduce, add back, in. Then you could reduce some at the highs, and now you have this big winning trade, and you're good. You don't have to do anything. When a candle goes back and forth between green and red, don't trade it. We want long red and green bars. And we say that constantly. So like if we're looking at right now on the 60-minute, the futures, it's pretty green, right? So we're going to have more evidence on the upside for 60 minutes versus doji inside bar goes up, down, up, down, up, down. It's chopping people up. What happens and what the market does is it forms what we call equilibriums. So the broadening formation, we know the broadening formation does this. It goes like this, right? So you say it's like when the higher time frame's chopping back and forth, what's happening? This is happening. So if this is a 60-minute, or let's say this is a daily chart, what would the monthly look like? More than likely, the monthly would probably look like this. So this would be last month. This is the current month. It's going like this. It's an inside bar. When you go inside, this starts the new broadening formation. So when you go inside bar, this is the new triangle that's forming, which is why, like we said this morning on NASDAQ, when we went inside 60, if we go Qs, when this went inside bar, we said we're forming the new broadening formation. You'll see this is the current 60 broadening formation. When that 60 opened as a scenario 1, it told you we're going to start a new one right here. When we opened at 10:30, we knew we're going to start a new broadening formation. So we draw right to left. As it grows, the bigger the broadening formation is, the more likely it is to work. So we don't have to trade the open here. Once it starts ticking back through in here, now we can start 2-2 here, 2-2 here, inside here. We can play that. Then it ticks up, and now we don't know. You'll see this is the new broadening formation. Boom, 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 boom. So now we have to get outside of this thing if we're going to expand and take the morning highs or the morning lows. And it's a matter of, buyers or sellers, who's going to win this? It's a tussle. They're back and forth. The sellers sell it down, the buyers punch them back. The sellers sell it down, the buyers punch them back. And then maybe we get the seller selling it down again. We'll have to see. At this point, you're nowhere near a 15 down. Inside fiver, 30s are 2 down and green. So I would say it's more likely to try and go to the highs again. It's just we're inside 60. So I prefer not to trade this directionally. You can trade this broadening formation countering the previous move, but trading directionally in here after the highs, not ideal. And if we go to the scan site, this is a scan we should be able to do. So if we go to setup, we can look for inside. And we can clear the enforce. And it does look like we're having still issues. What? It's sad. I really wanted to talk more about the scan site today. We just have a lot of updates we're putting through right now. But right now, I'd probably say you more than likely have like 400 stocks inside on the 60s right now. I wish I could scan it for you guys right now, but sadly, They're doing some updates currently. Once they have the updates through, though, we're going to be able to literally scan for any pattern we want, which is going to be super, super cool. I cannot wait. I think you missed my question. Yeah, let's take a look. Wow, you must have asked it a long time ago. Long time ago. So you can trade against daily continuity when intraday continuity changes. So like, let's go to Meta, for example. And ideally, we don't even have to do that, right? But let me think. Yeah, here. So the first thing is what I want to show you is wicks happen. And this is so important. So if a daily bar is going to open and it's going to go bright red, notice it's going to have a wick. So what happened? It went green and then something happened to change it. There had to be something that caused that to change. So what caused this to go from green to red? Well, if this is our daily time frame, the 30-minute time frame is likely, or it might look like this. So the 30 opens, it goes green. The second 30 of the day opens and decouples from the daily open, which means the first 30 of the day and 30 opens are the same open. So we actually don't know what this 30-minute group is doing. We only know what the daily group's doing. Because think of it like this. When the 30 and day open, they are the same level. The second 30 of the day, they separate. So when they separate, we now have two separate levels that open at separate times. Therefore, we have gone from one evidence where we only have the day, because the day takes precedence, to two pieces of evidence. We have the day and the 30 group. So when the second 30 opens, if this ticks red, the new 30, when this is red here, the seller is more aggressive. And if that works, it negates the day. And now the day is going to close red on the day. They started up, second 30 opened and decoupled. That went red. The sellers are more aggressive and they negated the daily open. Now, in order for this 2-2 30-minute to work, where it goes up and then back down, you need to have a 5 or 15-minute signal in here to cause it, because we know how that happens. So on a 15-minute basis, the 15 might look like this. So if this goes 2-2, the magnitude of this 2-2 reversal on the 15-minute is to take this out. So when this 2-2 occurs, the new 30 is red. Whoever was buying in the open, we don't have evidence of when this is red. When this 15-minute goes 2-2 reversal, it now has a target. They are selling, they're hitting the bid on the new 30. The magnitude is to negate or change the daily open. And if they do that, we successfully create a broadening formation. If we then continue and expand, closing out of that broadening formation, it is now into expansion. Given no reversal against, it is now going down for sure. So this creates a winning position. This continuation here causes expansion, and given no reversal against, you walk your stop down and you're good to hold. And this is what causes the change of continuity. And this happens every second 30 of the day, second 15, second 5 minute, second 60. The main ones we're watching are the 30-60. So when we go to the SPY this morning on the 5-minute basis, the first 15 minutes was red here. So if we had a 15 chart open, it would look like this. Then the new 15 opens and it gives us double the evidence. Before we just had the day and we had separate 5-minute open in here. Now we have a separate 15 open. We've doubled the amount of evidence we have between the day, the 15, 30, and 60. When this goes green, we have no evidence of short sellers, and they were shorting into recent lows. So we know this is a broadening formation. They're just going into new lows like this. So this goes green in 2-2 reversal 5-minute. The magnitude of that 5-minute is to take this out, which means potentially they'll take out the morning highs because they'd be closer to doing that given no reversal against on a 5-minute basis. What this causes is a 2-2 reversal on the 15, on the second 15-minute of the day. which changes the day from red to green. So our 5-minute signal causes the 15 2-2 reversal, which causes the day to be negated from red to green. Given no reversal against, you're going to go and take out your magnitude, which would be the outside day. In this case, SPY was just shy of it. Qs and I believe IDBM did do it. And a lot of stocks in the SPY did do it. So if we go to like Citigroup, you'll see this is another way it can happen. It opens as a gap down into recent lows. We don't want to short this. Goes down and then green. That is a potential outside 15er. In order for an outside bar to occur, you're going to have a 2-2 reversal or a 3-2. So if we go to the 5-minute, we had a 3-2 on the 5-minute, which caused the outside 15 reversal. If we go to a 3-minute, you had a scenario 3-2 3-minute, which causes the 15 to go outside bar reversal. If we go all the way down to the 1-minute, you'll see it was a 3-2 1-minute to cause the 2-2 15 or the outside 15 reversal. In this case, since that negates the day, this sets up the 3 2 down in green, 2 up 30, where these two bars are going to go outside of all the bars on the left, which it does. You'll see the new low, then the new high, and then right back into the range. Does that make sense? So we can only trade against continuity when we change lower time frame control, and we do that more often on the decoupling. You can do it not only on the decoupling. So if we go to utilities, for example, last week, you'll see we pair this daily shooter signal with the pivot machine gun to speed price up by removing liquidity. This goes 2 up in red. We draw our triangle right to left. When this signal breaks, you'll see Monday's open is here. So the week was still green. But given we have a 2-2 day, the magnitude's to take this out. And we have a pivot machine gun, which means we might take this out, which means we might take that out, which means we might take this and this and this, where the pivot machine gun causes price to speed up. So if we go back to here, you'll see the PMG is found by looking for consecutive lower highs and higher lows. When price breaks the first reversal, it causes all previous long or short traders to be forced to exit their position. This removes liquidity from the buyer or seller, and that's what causes price to speed up. So you can see pivot machine gun with the signal to line that up and take all of them out. So we go to this, you have the 15 or the daily shooter signal paired with the pivot machine gun. If that works, we'll change the week to red. If that works, we'll change the month to red. So the daily group 2-2 reversal causes the change to the week and month continuity, negating it from green to red, which causes everyone trading this month and this week to take a loss here. So what we want to do is pair signals back through previous range, ideally pivot machine guns, with full time frame continuity, either at the time of the break of that signal or where continuity changes as levels back through previous range. And this is why we trade the broadening formation. And Rob would explain it like this. When you go back through a previous range, it's like hitting decks or floors. You hit one and that breaks, and you hit the next and that breaks, and it keeps going because as you hit more, it speeds up. And the best way to see this is as such. When you take a signal back through a broadening formation, it does this. And I know it's probably not the most tasteful, but we can see, so if we go to it, it starts moving pretty slowly. And then it speeds up. It goes boom, 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 takes everyone out, right? And I know this is sad. It's not the most tasteful, but this is the best example I can show you. Because the first triggers the rest. And that's why we take signals back through a range. Where this daily participant that came in and sold today triggers the weekly guys to sell, triggers the monthly guys to sell. And everyone has to sell then. So the intention of the scanner is this. So for those that are patiently waiting, I'm so thankful for you guys. I know it's been taking so long. We're so close now because we've changed how the backend's working. But this is our intention, and hopefully this makes it make more sense why it's taking longer. So when it comes to trading, there is a few different things. So the first is you have data, like raw transactional data. In order to make this useful to traders, you have to aggregate the data, which creates your candlestick charts. So this is like your trading view. This is like your TOS. They take data, they aggregate it, and they give it to you. The next part of it is you have this aggregate data, and you take this down here. With the aggregate data, you need to analyze the data. And this is like, let me think. This would be kind of like your unusual whales. Or your Discord groups that you're in. Anyone that's doing market analysis, you're taking aggregate data and you're analyzing it. And then from the analysis, you need trades / risk management. So from there, you're going to have Strat scanner. So what we're doing right now is we have all the data. We have all the tick data and whatnot. We have aggregated the data, so we have all the time frames that we want. We're working on making sure this analysis is 100% objective and correct. Because without correct and objective analysis, we can't give the data to you in good faith. So the problem we had before is we were able to track the main setups we're looking for, like 312s, 122s, 322s, but we weren't able to get the actual data of how many twos up do we have, how many twos down do we have. Can I scan for continuations? Can I scan for just inside bars, plainly, that are in force, or just hammers that are in force, or just inside bars setting up, just hammers setting up? So we did all like the more complex patterns, but we left out the less complex stuff, which wasn't my goal in design. It was just like, hey, let's get the first ones done and then start adding this stuff after, just so you get a hang of it. And the developers went one way with it, and then they're like, okay, well, there's way more than we thought, which I did tell them there's gonna be a lot more, but they're like, there's way more than we thought. Like we thought we were gonna have like max 32 to 64, and it looks more like it could be hundreds. So they're changing it to go from like, you have this rigid pattern that you fill in, where it's like 322 that's setting up 2 down and green, and you just fill it in with all the tickers, to you have all the tickers and you have every scenario, 2's up, 2's down, doesn't matter. And then from there, the user can filter based on anything they want. So we're switching from like the setup signal mode of thinking to the, I want to filter for all the data and have 100% accurate data mode of thinking. And that's what we're doing. They said hopefully, today or tomorrow they'll have the update through. It's been taking a little longer than expected. But that's what's going to give us the analysis. So we just have the analysis, 1s, 2s, 3s. You can scan the whole market for them. Right now, I think we're tracking 1,600 stocks. Then from there, trades and risk management is the next part. So once we have this analysis cracked down, we're going to share it to you guys, because you guys know how to look for simultaneous breaks. You know what it looks like. The software is going to help you find those. So like, for example, this is probably not going to be accurate to today, but today, if we just go in forest, which again, it looks like we might have some data issues today. They're doing updates today, so probably not the best time to be showing. But if we go enforce true, so we go today and we go enforce true. Simultaneous breaks include the consumer cyclicals, which we're working on how this is calculated. But this automatically shows you where the simultaneous breaks are occurring. And in this case, this is calculated incorrectly. We're still working on the back end data, but it's going to help you do the data analysis at like in a lesser way right at the beginning. So you're gonna be able to scan for whatever you want. You're gonna be able to see simultaneous breaks, and you're gonna be able to get sector statistics, which shows you today. It's like right now today, how many things are going up and down. It's like, well, out of 100 stocks we're tracking in the SPY, 88% of those are going down today, and we have 0% going up. So this point, it's like SPY is a sell, Qs is a sell, as far as this is saying. Right now, this isn't accurate because we still don't have continuations and those patterns added to the list, or just plain 2-2 reversals. So this number is going to be much more accurate once we get this next bug fix out within the next day or two. But what it's going to allow you to do is quickly find your simultaneous breaks, quickly find your signals in force, and reduce the amount of time of going through charts. Because again, you're going to be able to scan for whatever you want, and if you just play simultaneous breaks, like we've been talking about for forever, it's the best signal you want. You can just wait for that, and it will show up on the scans for you. You're going to see them when you look for setups. So if we went looking for setups in, let's say we're looking for, and right now it's not going to be filterable. This is still another thing that we're working on. Let's say we're just looking for 3-2-2 setups. It's like anything 2 down in green, we'd be able to scan for in here. And you would see if a simultaneous break is setting up based on the color, how many of those are actually doing it. And we're going to have the statistics for all of that. That's more of like a version 2 thing that we're going to be working on. We're still trying to get this version 1 out. And the biggest thing we're working on is just, can data be accurate? And can we get all the data that we need? And once those 2 things are satisfied, we're going to release it. And hopefully the next update will do that. So that's the goal of the scanner. And that's why it's taking so long. And then the last part of it is in here. So trades and risk management. This is the goal of the screener. We're going to take out pretty much all the bias. We're going to take out all of the guessing, and we're just going to tell you what to do, pretty much. It's not going to be, again, it's like, this isn't investment advice, but when it comes to simultaneous breaks and signals and universes of how we trade them, we know it for sure. It's like 2-2 on a Tuesday. We trade the 2-2 reversal. If it doesn't reverse, we hold it. So we can track just that setup, and you can just trade those into full time frame continuity, even better. And that would be trades and risk management. It's going to tell you what to trade on Tuesday morning, and it tells you how to manage the risk. If it hasn't reversed, it would show up as still good, hasn't reversed. So at the end of the week, you might have 60 2-2s on a Tuesday. Wednesday comes, 30 of those keep going, the other 30 don't. Now you have 30 of those that are the best trades on a Tuesday. And then the next day, let's say half of those go inside, but 15 of those go 2 up. Those are now the best trades still. And then the last day of the week, anything goes 2 up, it might be 7 of the names. Those are the best trades at the end of the week. So you start with this wider list and you gain evidence as to the strongest and best trades towards the end of the week. So the goal is, on that universe specifically, trade 2-2s on a Tuesday, use the 60 signals, which we can alert on with the scanner, or, have show up, get sent to your phone, whatever it is, via the scanner automatically. Use those signals to create winning positions, and then hold if it hasn't reversed. Add to it when you get more signals. So that can all be built in, and we can have kind of like an options flow. Like if you've ever used Black Box, for example, this is like version 3 type stuff. Let's see. Yeah. So you can see it's like they have a, it's not letting me pull it up. I guess this is like kind of the image in my head. We're probably gonna have to tweak it a little bit. But you can see it's like they have options, and in this case, all. And it's a flow of signals. In this case, it's just options flow. We would have a flow of signals. You'd pick like Dow Jones 2-2 on a Tuesday. And then maybe you select 60 and 30 signals. And now it's saved. So it's just going to tell you all the 30 60s 2-2 on a Tuesday. When they set up, maybe it comes through as yellow. When they break, it goes through as green or red based on the direction. And there, now you have this flow of signals. When they set up, you can go look at them. When they break, it shows you when they break, so you can monitor the simultaneous breaks. And then, maybe on another screen or something, or maybe a different page, it can track those signals, still good or not still good, based on reversals. Like that'd be like the end goal. And then you can do algorithmic trading and stuff with that data, if you're savvy, or there's a possibility that we can do it through our through our system, although there's some legal loopholes and stuff when it comes to automated trading with the Strat. But that's like that's the broad picture of what we're trying to do. Many other people are doing scanners and they're just like trying to copy run Strat and copy our old stuff, and doesn't really bother us that much. There's already a lot of Strat scanners, but there's nothing built by Stratters for Stratters that's going to do what we want to do. So that's the whole goal and game plan. And as we were talking, let's go and take a look at the cues. You can see, look at here, right off the top of the triangle, boom, triangle out, boom. Don't you love to see it? And you can see on the cues, though, it's like we were saying, it's like down, up, down, right in the middle again. It's just, there's not much you want to do with that, right? Do we have any other questions? So it's pretty much like free one-on-one session for anyone that's working with the Strat and is confused by anything. Well, RKT, they took last week's highs but came back in. So at this point, they bought it, but they're rejecting potential 3-3. So we have no evidence of a buyer this week, nor right now. It's closer to the 30 inside down. So you could try and actually play this to the short side, although you only have about 8 minutes till the new 30s open. But you can see pivot machine gun, they're taking them out. So for now, no evidence. And that's the cool thing with the Strat. It's like, if we're wrong, we're wrong. We don't care. Just get out. And I personally think potentially this comes back later this week, but we'll have to see. No, whenever you're an inside bar, you just don't want to trade it. The bigger the mother bar is, the more tradable it is because you have more range to play with. It's like, if we go to SPY and Qs, this bar's range is 40 points. So even if it's, 10% of, or let's just say, even if it's half of that range, it's a 20-point bar. So you can see it's a little less than half of the range, 20 points. So that's still very tradable, but that means there's no 60 signal right now. You're only going to have like the 3-minute, 1-minute, 5-minute signals. It's like you're a 3-minute guy, 2-2, you can play that. Broadening formation, you know where it's going to go. If that works, it goes here. Inside RevStrat, 3-2-2, you can play that. If that works, where's it going to go? Down there. Right, and then there's some 2-go-3s in here, so that means you had some oneers. So you see 2-2-1er, where's that going to go? Well, triangle, it's going to take this out, and it does. Then pokes up, broadening formation, where's that going to go? Well, if that works here, it's going to take this out, and then it does. Boom. And now it makes the new low, we don't know. It's still an inside bar, so when you're inside, if you're shorting at new lows or longing at new highs, you're going to get wrecked. You have to do the opposite. New low, you need to think long. New high, you need to think short. And that's true overall, but everything's inside bar right now. Yeah. And what that means is you're about to have a simultaneous break. Inside bar 312 Chicago across the whole market. So we don't have to touch this stuff. You can see it's like you'll get killed if you're trying to trade directionally with the color of this. But once it goes 312 reversal down 6 minutes, then we might take the morning lows out. Anyone that bought this, they're jammed. They could be really screwed. Because you'll see the broadening formation, right? New high, inside bar down would make the new low. So boom, new low, new high, new low. That's what we'd be looking for. Daily, weekly highs and lows. Yeah, if they're signals. If you take previous day's lows or highs and it's not a signal, it's less likely to keep going. Versus if you take a previous day weak lower high and it's a signal, it's more likely to go. So yes. The thing with signals is if it breaks and it's not enforced, like let's say RKT, we're trying to long this week. If it breaks this, again, like we said, we have to be aware of this broadening formation. It ticks up above 1560. When it's 1559, it's no longer working. It must be 1561 for that to be working. Because this, right? It takes last week's highs, reclaims at 1559, it's back below, and then boom, now they're already trading 1439. So it must stay above. Given that this was a 3, you must stay out of it for sure because it's a broadening formation. Like you can see on the 30-minute, when this goes up, 3, broadening formation, new low, new high, and then it goes back in, new low, reversal. 1, 2 down, add, it's just continuing. So it has to stay above that. If it doesn't, we can't play it, which is why we use tight stops. You either buy it, gap down buy in the morning to get a good winning trade, or you try this week up, ticks back below, maybe risk 20, 30 cents, doesn't work, you get out, whatever. Go trade the things that do work. SPY went 30 points today on the candle, on the 30.
Stop sales.
Were you trading those broadening formations, Sarah, on the lower time frame? So if you take a 30 to trigger a 60, that 30 has to work. You know how long you got. You got 30 minutes. If it doesn't work, you're an inside 60. And that's why we want to be closer to doing things. It's like, let's say, like this week, we went to SPY. If you're like, I'm going to take this 2-2-30 to cause an outside week, I'd be like, you're crazy, right? Maybe it does it, but you're nowhere near taking last week's highs. Versus if you said, I'm going to take this 2-2-30 to cause an outside 60, then we can talk, right? Your outside 60's here. And then if it stays up, then maybe you can go outside day, outside week. But you have to look for those lower ones first. So like, for example, I'm going to cause this outside 30 rev strat 1-3. Notice how this 30 broke during an inside 60 on SPY. Whenever you break a 1 and the higher time frame's still inside, it's more likely to reject it, which is why we're playing that broadening formation in here, like we talked about. So when we go in there, we can use the 3-2 reversal on the 5-minute to cause the outside 30. We're not going to use the 3-2 5-minute to cause, an outside year. Maybe it does, right? But that's not the first target. The first target is outside 30. Once it hits that, you can take it from here to here, boom, 11 points, reduce it by half. Your stop can be this. When it goes 2-2 here, you can add back to the position and hold it. Now, if that works, you will have a 3-2-30 to cause an inside 60 down at the same exact level here. So because of that, in this case, it's going to be a continuation. But if we can stay below, we still have 3 minutes, but let's say it's 49279. If we can stay below that, we're going to have a 60 down and a 3-2 expansion, which means this broadening formation we talked about. Notice how it grew. Scenario 3, new low, new high, new low. If we can get out of the lows of this, we'll take that out. So the same way we want that, if you take this signal at the top of the range and you have a winning position, you can hold it as long as it stays down here because it's more likely to continue down. It'd be more likely to make low day. So you can use this to create a winning position, reduce it by half to guarantee a winning trade, put your stop against those highs, risking their money instead of yours. And then if it's going to work, you'll take it all out. If it's not, you lose a little, or you make a little bit of money. Or you can even walk your stops down. You can say, my stops could be higher than 15. If it reverses the 15 on the new 60 open, it's more likely to go inside 60 up. It's reversing. That would be perfectly fine by me, right? Does that make sense? I know we're talking quick, but you can always just rewatch it. We try and be very specific. Although we're fast, we're specific. So if you rewatch it, you'll understand it. As long as you know the 1s, 2s, and 3s. That being said, into the flip, Citigroup 3-1. Goldman Sachs 3-1, weaker than the rest of the banks. XLF 3-1, simultaneous break setting up. Pfizer 3-1. XOM 3-1. CVX 3-1. FANG 3-1. So what does this mean? The whole market gapped down, they bought it. Then the sellers came back and said, nope, punched him in the face. Now we're inside bar. So they tried it down, tried it up. They're going nowhere. Now they agree on price. On the next break, we have this equilibrium where buyers and sellers agree on price. We take it down, a new seller has entered the market and they're hitting the bid. We'd like to see them take a low day, and then we do not know. If they get rejected inside down and then green, it'd be a potential rev strat. But if we get the whole market inside down, it's more likely this will take the lows out because everything is doing that. So we'll be watching that to the flip. This will be probably the last thing we're here for today. But you got simultaneous 312s, SPY, Qs, Dow Jones, and IWM all across the board for a 312 reversal to the downside. We call it a 312 Chicago. Got about 3 seconds to the new 60s.
Self-build.
Getting chopped.
I understand your sentiment, GC. But it's also when it's inside 60, it's like there's the up and the down. We had those 5ers, 15ers we already mentioned. I'm good with that. I haven't touched anything since pretty much high day. At this point, we are double inside. So till that 60 breaks, you're still messing about this triangle. Since we're double inside 60, it's potentially going to get a lot tighter. So we go back to the SPY. This is your triangle, but since this is now inside of this triangle, so it could get tighter. We'd prefer to see them go up and then smack them down. So triangle layout and then take the 60 down, maybe with a 5er signal. Why don't you consider pre-market? Because we're tracking at any point in time, probably 20 stocks or more. So I'm not going to look at 20 stocks per market. It's just not worth it. If you want to look at it, you can. If we talk about gappers or something and you're like, wow, this is a kicking pattern, blah, 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 and I want to look at pre-market, go for it. So you can see inside 60, inside 30, inside 15. That's a no-go zone as far as we're concerned. A 2-2 using pre-market candles. We use the futures. You can use that. Like, I'm not saying you can. I'm just saying we don't. We look at the futures. That's about it. Like if you're trading gappers and you want to play it right at the open, probably can use those 30s, 15s at the open on the pre-market candles. Perfectly fine. We're just not gonna. It's like if we go to Google or something, we turn pre-market on. It's like you can technically use this 30 if you want to, right? You technically, so this 2215 was actually 21215 on Google, pivot machine gun of these guys. So if that helps you and you want to see this pre-market range and pre-market broadening formation, right? Like this, you can do that. You can even trade pre-market. You can trade this 2-2 down, make some money, inside up, make some money, you can do what you want. It's mostly just because it's a lot more to track and go through all the pre-market broadening formations when we can just, trade it as we see it after the open. At this point, we're still just right in the middle. So there's not much I want to do here with the SPY. And you can see even with the inside, let's see it. These fivers are still 100 points on NQ, so there's opportunity if you're trying to be a oneer guy, but I'm personally not. Broadening formation low, 60 time frame would trigger the downside. Do you favor a 60 trigger over exhaustion? So what we want to do, if we're trading ever at the bottom of this triangle, we don't want to enter on continuation. Like what we want to see that bring them up. Maybe we make a slight higher high to these guys, and then triangle out back down. So you can see the broadening formation here. If this is going to broaden, it goes slight higher highs to this. And then if we get a reversal, it could trigger the 60 down potentially. When you do that, you have to be aware you're entering into an inside bar. So if the fiver does not work, you have to just be out of there. Is it still a 1? But we'd prefer that if we're going to play the short here. At this point, still just fivers up, so they're back through the range. And on a 60 SPY, get this fixed here. You can see red and then opens goes green. This is why we don't try to trade this, or at least we don't want to. It goes up, down, up, down, up, down, and then up again. It needs to become a 2. Why do you think more people don't use or understand the strat? The biggest thing people don't understand is changing continuity. And then they also don't understand still good. If more people understood, if more people understood the broadening formation, how the bigger the range is, the more likely it is to work, and then they understood how to hold trades that don't reverse, more people would trade it.
Bill.
So we can see SPY here, it's still double inside. You make the slight higher highs on the 5 minute. These 3 bars go outside of that bar. My question is, we get fivers back down if that could trigger the 60, or does that stay still good and then expand this triangle, try and take out the top of the bigger one? You really want to master it? Honestly, I have a video. If you go to my Twitter, it's pinned. This video covers a lot of like I don't want to say the nitty gritty, but it covers risk management and it covers the basics of the analysis with the signals, how we talk about signals and trades and whatnot. That video is probably a good place to go. And if you're interested in more materials in the premium section, in the VIP education section, we have a full course by Rob Smith. We do have a boot camp, but we have not ran that in a long while. And that's like a couple weeks long every night for like an hour to hour and a half course that we normally do. But we haven't been able to do it for a while because we've been busy with some other things. Time frame continuity. In the video I just pointed out on my Twitter, it's covered there. And we actually use the boot camp course materials for that. struggling to memorize the strat combinations, go into the education section and print this out. Right here. You can print it out at, you know, any office store like Office Max or something if you don't have a printer, I believe. But print out some of those copies, put it behind your pillow, tape it up in your bathroom mirror, put it on the wall where you're going to be trading, look at it every single night, and it doesn't take that long. If you understand a 1, 2, and a 3 inside bar, outside, directional bar, then these are all just 1s, 2s, and 3s. So you want to know those first, and then all you're memorizing is 2, 2 reversals, inside bar reversal or continuation, and the rev strat. There's 3, 2 reversals, but besides that, it's really there's only 2 ways price is going to reverse besides the 3, 2 or just the rev strat outside bar. Everything else is 2, 2 reversal or a 1, 2. So on the 5-minute SPY, they're trying to go just momentum, triangle, expando. And they have a 3-2-2 15-minute at this point. So they're trying to take the 60s up on the new flip. Above that, they can hold it. What, 50.95. So you got 3-2-2 15er SPY trying to take the 60s up. If that doesn't work, you'll be a double inside 60. So it's got to stay out of that level we just mentioned. DKNG would be one of the stronger ones, although you have no pivots to come through. And pretty much the whole market looks just like the indexes. So at that point, it's really just up to those indexes. What are they up to? Twin Towers as a PMG is crazy. I just think it's the best visualization of what a PMG does. Or even just trading back through a previous range. It's really all the same. It's like this shooter 5er signal. When that breaks, it's the same thing. It's like tick, 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 takes them all out. 5 minutes.
Order filled.
KT1 coffee features, sure. I'm going to look at the cash contract, but it should be similar. So coffee, you're going to see it's currently an inside month down reversal, 212. The weekly is a 2 down continuation confirming. If you look at a weekly basis, you got some weekly pivots. The next one's right here, which should be your first target what you're looking for. This morning, in order to trade it, you'll see it went 3-2-2 to the downside here with no reversal against. So this position's considered still good if you're trading that. If we go to the 30-minute, you'll see it was a 3-1-2-30 for an ad or another signal, so try and play it. But as of right now, it's just continuation. So there might be some lower time frame stuff in here. There's a slight triangle outs, but we want to see it set up again on those 30-60s. And on a 60, it's 3-2 expansion. So for now, I would say it's trying to take this out, 345.85.
Filled.
And then if we go to a lower time frame, let's say a 1 minute, you'll see the broadening formation in here. you can get out of this thing. It's trying to do that right then and there. New 15's open, so mind the new 15s. If you're playing those 3-2-2s, if they tick red, then you reduce. Because you'll see. So for now, they're nowhere near reversing it back down, but we're still in inside 60. So when that ticks red, we have no control to the buyers anymore. The 30 is still a 1, the 60 is still a 1. So at this point, we have no evidence of that buyer anymore. If it doesn't reverse, you could say it's still going up, but we're lacking evidence. And in an ideal world, it's like, let's say you take this here late, reduce, then you could put your stop at a 5 against you if you wanted to try and stick around in there. But for now, it's changing what's occurring here. And this is why trading those double insides is not ideal. You could trade off the lows here, but now in the highs, either that's 2-2 back down, they make the new lows, or we're just stuck in the middle. It goes 2 down and goes nowhere. This is a 3-minute chart. All right, let's see. Truly profitable trader. I'd say it's based on there's like 2 facets to it. It's your analysis and your emotions. And they work together. Most people say ignore your emotions, but I don't think that's true. The first is your analysis, because you have to be objective. So you have to know what's happening. Because if the charts tell you what's happening, then you can base your trades on it. So like when we're talking about this, that's a 2-2-3 minute. Either that works and we broaden information down here, or we're still in inside 15, 30, 60, and we're still stuck. Right? So that's the analysis. Now the question is like, is that a trade that fits my plan? Well, personally, I don't like trading inside 60s. So I don't have to take that. If I want to, I'd go a little smaller because we just have less evidence to make that work. So the analysis is the first. Do you know your 1s, 2s, and 3s? Do you know how to gauge magnitude? Like when this goes 2 down, 2 up on the 5-minute, do you know this is a broadening formation because this is a 3? And do you know the magnitude of that 5-minute, if it doesn't reverse, is to take this out? That's the first thing. So do you know where it's going based on the analysis? And then that also brings in, continuity and the broadening formation. So drawing the broadening formations out and knowing continuity. That's all under analysis. So you have to do that first. And if you go again to my pinned tweet, this covers all of that stuff. How to draw the broadening formations, how to use continuity, confirming and negating, and then how to use signals with all of that. So once you have the analysis fleshed out, you know what you're looking at. It's like, this is like Rob would say, you can't say that it's a cat, but sometimes it's a dog. It's either a cat or a dog. So when you look at a chart, it's not sometimes a cat, sometimes a dog. It's one or the other. So you have to fix that first. The second then is your emotions. Most traders will be rewarded for the wrong thing and then keep doing that. So for example, you take a trade and it goes in your favor right away. Previously, you've taken trades, they've gone in your favor, and you didn't get out and you caused yourself to take a loss even though you were winning. Because of that, you've been punished for holding winning trades. So when you get a trade and it goes in your direction right away, you want to get out right away because you're going to have this feeling, well, last time this happened, I felt like I should have gotten out, but I didn't, and then I lost money. So you have this false belief of in winning positions, you're scared that they're going to turn against you. The way to fix that is to use your emotions kind of as signs or signals instead of using your emotions as reasons to make trades or get out of trades. So when you have a fear of holding, ask yourself, how much evidence do I have to hold this? What's my continuity right now? Am I at the top of the broadening formation or the bottom? Exhaustion risk. And has it reversed against me? So like, let's say we're SPY 3-minute guy here. Boom, 2-2 3-minute, we're in, and it goes here. Then it comes back a little bit. And you're like, oh my gosh, this might come back in on me when this is just pulling off the highs a little bit. You ask yourself, well, what's my continuity? This point, the 60 is green, 1530 green, and the day is green. So your continuity right now tells you, no, that's okay. Although it's an inside 60, which you'll be aware of, continuity tells you, okay. The next thing, has it reversed? It hasn't. it's nowhere near going 2 down on the 3 minute. You'd have to take this out on the next bar to reverse it. So if it hasn't reversed and continuity is still good, you take your emotion of I'm terrified and you use it to tell yourself to check the analysis. So it's like, I'm scared this might turn against me. Instead of being scared, closing it out, and then it reverses and goes against you, you want to get scared, check your analysis, say it has not reversed yet, so I'm not going to get out. If it does reverse against me, I will get out because I know what a reversal looks like. So if you take the steering wheel away from your emotions and you give your steering wheel to the strat and you say, based on the 3 universal truths, actionable signals, continuity, reversals, broadening formations, or technically that's 4, but it's based on 3 universal truths. What should I be doing right now? Should I be holding, reducing, or getting out? So if you can do both of those things, get the analysis down so you're doing it objectively and correctly, and then make sure to give the steering wheel to the analysis using your emotions to tell you to check your analysis when you have heightened emotions, you're going to fix most of the problems. The way you go about that is when you're learning the strat, pick one setup. So like just trade 2-2 reversals. So if you're just playing 2 down in green, 2 up in red today, if you on a 5-minute basis, let's say we'll throw in hammers and shooters in there. Let's say we're just trading 2-2s. Here's a 2-2-5er, the first one of the day. Boom. 2-2-5er here. Boom. Or actually, this is a 3-minute. Let me fix that here. So let's just say we're just playing 2-2 reversals. 2-2 reversal here. Boom. Inside bar add, we don't touch it. 2-2 here. Boom. Right. And then the 3s, 3-2s, we're not touching it. 2-2 here, make a losing trade. 2-2 down, maybe you make another losing trade. 2-2 here, you make your money back. So you can see we just trade that and we get used to one condition. We just trade 2-2s, we can get good at just that. Then what we want to do is if it works, hold it. If it doesn't, get out. And the way we practice this is not just on a 5-minute here. Normally we're going to use the 30-60s and we'll say trade those 30-60s and use a tight stop and use small size. Because I'd rather you go in there, you have $1,000 account, trade fractional shares on your Robinhood, buy a quarter of a share and take 20 trades a day and stop out of 19 of those 20 trades and do that for a couple weeks. I'd rather you do that than go in and try and look to make money right away. Because what you want to do is train yourself out of the fear of taking a trade, train yourself out of the fear of holding or not, or I guess the fear of stopping out. Most people don't want to stop out because they feel wrong. Stopping out's the thing that makes you right over time. So you need to stop out. So you want to get over your fear of taking trades, over your fear of taking trades off, stopping out of them. And then when they do go, you take 20 trades and one of them, you take it, it goes right away, hold on to it. So if you practice doing that over the course of time, you might lose 5 cents, 10 cents, 20 cents, 30 cents, 5 cents. Then you make $3. Now you're up. Then you lose 5, 10, 20, 30 cents. Then you make $5. And you're going to go through that and you're like, okay, well, I stopped out of 20 trades, made one good trade and it paid for all my losses. And it's going to click. Then once you do that, it's a matter of picking the universe you're going to trade. The best one, in my opinion, is simultaneous break, which it takes a little bit more effort to find the trades and confirm your trades. But if you trade simultaneous breaks, such as this morning, the 2215 on SPY and the 2230, you're either right or wrong. Your stop is if it reverses against you. You have so much evidence it should work, your win rate could be into the 80% range if you just focused on those. So then it's a matter of what time frame are you going to do? When you're looking at a 5-minute chart, this is some really quick stuff. It's like down, up, sideways, up, down, back up, back down, back. Now imagine this was a monthly chart. When this inside month breaks, you have 30 days to trade this. It's not as fast. So if you're a monthly guy, you can just go trade the monthly chart the same way. You can trade this 2-2 reversal, and you can put your stop at the open of the month or the low. Trade this inside bar, you can put your stop here. And you can trade a monthly the same way we would. And right here, shooter month, this takes 30 days to set up. You're going to see that. 2-2 here, flip it all short, make some back, make some more. And it's all going to come down to, can you actually take reversals as your entries and not play continuations, do it back through a previous range, and then add evidence to it with the simultaneous break. So you put all that stuff together, then I think you can have a pretty good system. And if you're looking like, okay, well, how do I do it right now? trade 2-2 reversals on the 30-60s and do it on the gap list. There's many places you can find gapping stocks. You want stocks that gap down to go 30-minute 2-2 back up. You want stocks that gap up to go 30-minute back down, 2-2 reversal. You just trade those, and there might be 3 stocks one day and 10 stocks the next. But if you just did that, really small size, tight stops, the high or low of the bar you enter on, you'll start seeing it every day. And if you can't do that, if you have a job, you can do the same thing on weekly breaks and signals.
Order filled. Sub filled.
Make sure you're on the right track. 3-2 week, month 2 down, want quarter to go 2 down to the bottom of the range. Yeah, as long as you have all the 2s going.
Filled. Order filled.
Does that make sense though? Hopefully. And I'm sorry I haven't looked at free chat. I've been looking more at the YouTube chat. If you're trading indexes, I'd prefer you be looking at regular. You can, like, if you're trading the open, you can use electronic to get more signals. Like in the morning, there was, again, like we had those shorts on the 60-minute. But the thing is like we said in the morning, it's like you'll have stuff to come back through on the futures. So like we go extended hours. You might take this and you're looking at it and you're like, well, you know, I want to take all this stuff out, which it did, right? So it gives you the morning lows, new low, 2-2 reversal, pivot machine gun, like we said, boom, right? New highs, blows everyone out of their shorts. So you can use this for more evidence if that makes more sense to you. If not, you can just use the 225 here. It's the same thing. It's just a matter of understanding how those are going to work together. Because what happens is in the morning, we'll normally counter this initial move. So if it's down, normally it will try and go the other way. In this case, we had the gap down on the futures. So like, for example, it goes up and then it counters that move, right? So it's a matter of if it gaps up, we prefer sells, and down, we prefer buys. You can see here, down and then counters the move, and then broadening formation does it again. And then again. Right? You can see even with the news event here, goes up and then counters the initial move. Go in here. Goes down and then counter initial move, pivot machine gun all the way up. So as long as you understand that, however you want to play that, you can go for it. You can see down. In this case, it was going up and then it reversed down, then up, then broadening formation down, then counters that move, then up. So it's just trading against those guys. See initial move down, 312, 225 back through the range. Boom, takes them out. It's just pretty much every day they're going to do that. So he goes down, then up, and into the close goes down. So they go up initially and then take all those guys out, taking these lows. You can see in here, puke, then reversal 225, boom. See in here, it was going down, then reversal up, 225 back down through these buyers in here and takes out all the morning or all the overnight guys. You can see in here, it was going up, reversal at the open, down, and then reversal here takes out all these guys. So you can see it's just countering that move. The best ones are like this. You can see down and right at the open, boom, you're in. And this is probably the most useful thing you can do if you're going to be a futures trader, is just making sure you're on the right side of that. And when volatility increases, you're obviously going to have better movement to go after. Like, not always are you going to get an amazing trade, and that's why we just stop out. We say, so be it. So for example, down, maybe tried it up in here a couple times, whatever, it stopped you out, so be it. You can come back. This is what we say is a back ender. If it's like this in the morning, chopping them up, you come back towards the latter half of the day, afternoon, in this case, lunch here. Let me get my Chicago time up here. So you see this is 11. So in the latter half of the day, that's normally when the move happens. So you can see, you can skip all this morning stuff. And then all you're waiting for is, okay, they went down, I'm going to trade it the other way. They went up, we're not going to trade that. Went down in here, slight lower low, and then trade it the other way. Because the day was green at that point, so you prefer that. But you're going to see it's like down, reverse, boom. And some days it's just a chop chop. It goes up, then down, then up. And you can see later in the day with the news, up, down, counter those guys. Boom. Minimum gap. So on the gap list, we're normally looking for stocks with news, and then we want them gapping around 3% or more. So like a good example of what we'd look for is like J&J. So this is gapping. It's gapping on news of the tariff stuff, I believe. And you'll see we draw the broadening formation out. This is opening at the bottom of the broadening formation, but we have a kicking pattern. They went 2 up in green. Anyone that bought yesterday has to sell to close. And if you bought in the past 4 days, you got to sell to close. So the second it goes green to red here, we can actually hit it and cause an expansion. Then you'll see they back test it. The 2-2 rev strat right here. Boom. So what you do is you trade the 30/60s on this stock until it stops moving. So you trade it this day, goes inside day, you ignore it. 2 up, you can trade it this day. 2 down, you can trade it here. 2 down today, you can trade it here. So if we go in there, let's just say we go to a 60 chart or a 30. So you see on the gapper day, 2, 1, 2 right here. Boom. Make your money. And then it goes inside day. We ignore it. Inside bar on a higher time frame, we're not going to touch it. Does go 2 up. There's a 30 signal here, make some money, and that was it. There's nothing else in there. Or 60, I mean. On a 30, you'll see this. So 2, 2, 30 here, make some money. Boom. Goes 2 down, 2 up. Try it, fails. Made the new high a day, but didn't keep going. 2 down, 2 down, 2 up. Try it, boom, high a day. And then there's profit taking. And then in here, the next day opens 2 down, 2 down. We can't short that. Then it goes inside shooter. That's a signal below this. Short, boom, make a lot of money. Then 2 down, 2 up. You could have tried it. Did hit its target. Then 2 up, 2 down. Hit it again. Puke. Make a lot of money. And 2 down, 2 up. If you wanted to try it, you could have, but it didn't work. 2 down, right back in the direction of continuity. In this case, since we are below, you can see this happened Tuesday. The week opens here. Since we're below that, we prefer the downside signals. It's like we prefer this 30 and the inside 60. You can trade this in here, as the day was a 2 up. But once this 30 starts kicking in, we have a 2 down on the day, and we're a 3 on the week to the downside. We prefer just let them stop them out and then 2, 2 down. Let them stop them out and then 2, 2 down. And today is let them stop them out, 1, and then rev strat. So it's not part of the trade plan here. So at this point, double inside 60, there's nothing we can do. Whereas you see options with the strat. Yeah, market orders. The biggest thing is you have to manage options a little bit different. Not to say you're going to get out before it reverses, but when you hit targets with options, you need to either reduce or make sure you defend aggressively, which means it's like we shorted J&J on the 2-2 day here below 157.52. Once we start coming into these targets here, we either defended aggressively by reducing or we defended aggressively by pushing our stop into a profit. So if we shorted at 157.49, maybe we push our stop down to 156.72 to guarantee we don't lose. Because the biggest thing that kills traders is you make a winning position, then it reverses, goes the other way, and you lose it all. We want to make winning positions, and then if they keep going, hold it. If they don't, get out. New lifestyle possibility, far away from the people. Ooh. Trading apps are slow, no trades today. That's good. Still got the rest of the week, and we're going to have this big mother bar. Oh my gosh, this is going to be a fun thing. So the reason this mother bar is fun is now we have a nice broadening formation to play with. So we prefer not to diddle in the middle like we've been saying. It's double inside or nothing we want to do. But let's say we make a new high and reclaim it. We can go down here. Or maybe we make a new low and reclaim it. We can go back up there. So we have this across the whole market. That's something we want to know about. I do it alone, my legs are shaking. It's because you are probably trading too big. That's why our advice is go in there and trade fractional shares. Do it on Robinhood. No commissions. If you have $1,000, you can do $15 a position and you could trade however many times that is. You can take 66 trades in a week. And they do take longer to settle, I believe, unless they've, I know there was an update to that. I'm not sure about settlement times on shares now. I personally don't trade them very often. But that's 66 trades in a week, right? And on a cash account is when you want to do that on. The mother bar, this level and this level is the broad information. So you have new high, new low, new high, and then in the middle, we're looking for a new high, new low, ideally, or new low, new high. Since the market's going down, we'd prefer it go up first and then crater. CPI GDP minutes this week? Yeah. Or GB. GDP. My bad. All right. Well, I do have a meeting at 12 CST, so I can take one last question here if you're interested. So post your question in the chat. It's gonna be my last one. I gotta make some breakfast and then I gotta meet with our web developer. $8K down to 2.5K. Yeah, no, we don't want to do that. So you have 2.5K right now. We already know you are obviously not doing something correctly. So you need to fix that first. What I would suggest is get on paper trading first. Because if you have 2,000 left, you can do a lot with that, but you need to have the sharpened skills to make that work. Trade on a 1 minute. Ideally don't. Signals last however long the time frame is. So if you have a 1 minute signal, it lasts 1 minute versus a 60 signal. Let's say we have a double inside. That might last 2 hours. This would be 2 hour signal. So we want to trade you could trade the 1 minute, 3 minute, 5 minute, but in the direction of higher time frame signals is the ideal scenario. 2 more likes to hit 100 before we end off the stream here. When do you add to winning positions? All right, this will be the last one. So you can add to winners in, I would say, 2 pretty distinct ways. The first way is you can use signals to trigger signals. Actually, there's 3 ways. Sorry. So like this 225 minute triggers the 15. You can buy it here, add to it here. And then you can risk your cost basis. So if you bought it here, added to it here, your risk might be this. You can also add via additional signals, confirming signals. So when this goes up here, it goes 2230 minute. Then we have inside 5 minute. So we had 225er in, inside 5er add. So 22 in, 5er add. So we call that the inside bar add. And that's what the most common way we're going to add to trades. If that doesn't work, we get out and we take our money and run because we have a rev strat against us. So it breaks, your stop is here, it should just go. We want it to. If it takes out the low of this bar, you get out. The next way to add is to set up signals. So that 15 minute 2-2 reversal, if you bought it here, it sets up the 30 minute. So let's say you bought 2 contracts here. When it breaks the 30, you can buy like 1 or 2 more, right? When it comes back in, you can reduce that, but you're still in a winning trade here. So let's say you bought 2 and then it stops you out of 2. Re-break, buy 2 more again, and you're in. But it must be in force. If it's not, then it may not work. In the case of the simultaneous break, which we saw this morning where everything went 2-2-30, you can buy it and manage your risk to reversal against. So because of that, let's say you had 2 contracts here above this. When this goes 2-2-30, maybe you only add 1 because your risk is going to be bigger. It's if it doesn't reverse, we're going to hold. So your risk, maybe it reverses and it reverses down here at like 490.79 if it goes 2 up, 2 down on the 15 or on the 30 minute. 30 minute would be where we want to do it. So we can either use signals to set up signals. So 15er sets up the 30. We can use signals to trigger signals. 5-minute reversal causes 15 reversal. Or we can use inside bar and other adds to the position, such as like a 2-2-2, which we don't have a good example of here. Let's just say we had this short trade, 3-2, we're in. Goes 2 up here, we can reduce it if we'd like, or we can just hold. It's nowhere near where we got it. When it goes 2 down, 2 up, 2 down here, we can hit it again. If it goes reversal against that, we get out of the whole trade. So maybe you have 2 contracts, you add 1 or 2 more, goes against you, you just get out of the whole thing. But if it was going to work, it would have been 2-2-2, and then we would have taken the morning lows out. And it's the same as the inside bar add. It's just a multiple bar continuation pattern. 2 down, 2 up, 2 down. And the inside bar, those are pretty much the ones we're going to be looking at. And you can also add on what we call momentum signals. So like, let's say here, you traded this 2 going 3, ticks down, goes green. You can buy it right there if you wanted. Up, momentum hammer add above this, 501.91. Your target's that, 505.98. So there's a lot of different ones, but really the 2-2 reversal, the inside bar add, those are the 2 main ones. And if you want the other ones, it's momentum hammers and shooters. And just any 2-2 reversal confirming it. Access the scanner when it's ready. When it's ready, we're going to post it everywhere, so don't worry about that. As far as if you're in premium, we're going to have to pull your guys' data and your names again. I apologize. Our Google account, we're transferring it, or we're making a new one. So I'm going to have to do that again. That's on my fault. But we'll tell everyone about it. Don't worry about that. Focus. All right. Okay, this is the last one I'll take. Can I just focus on the NASDAQ and the, NASDAQ ETFs? What I'd prefer you do is look at NASDAQ and SPY and then XLK and SMH. Because QQQ is the tech sector, which holds a lot of tech stocks, semiconductor stocks. SMH is going to be your semiconductor sector, which holds a lot of semiconductor stocks. And XLK is your tech sector, which holds a lot of tech stocks. So if you can line up signals at the same time across those, you're going to have more evidence for your trades versus just looking at all the different NASDAQ leveraged ETFs and whatnot. So look at the Qs, XLK, and the semis. And if you want to, add in the S&P in there. And that would be good. And if you want all the evidence, it's Qs, tech, semis, S&P, Dow Jones, IBM, and then all the other sector selectors in here, which are going to be listed out here. You see all 4 of these are your indexes, and then everything else is a sector or a big 7 name like Microsoft, Apple, Meta. Because when a sector breaks, the strength of that break is dependent on how many stocks in that sector do it. When an index breaks, the strength of that break is either how many stocks are doing it or how many sectors are doing it. Ideally, we got a lot of both. This morning on that 30 break, we had 444 of the 500 S&P stocks that broke. The initial break was 190, but they all confirmed and took them up. That being said, though, this is the last I've got. The live is always going to be saved and posted, so don't worry about that. If you're interested in Strat Alerts, check out stratalerts.ai, and that's where you can check us out. And we do have the scanner coming soon, so just make sure you're in the Discord for that. I believe, yeah, it looks like this page is no longer working. But I believe if you go to the description, we should have a Discord link in there. I'm going to update it with a more accurate one before we end off the stream here.
Sell.
Yeah, so just updated the link in the description if you want to get in the Discord. That's where the other stream is going on, and that's where this stream comes from. Sometimes we go live on Mondays in the Discord. Normally I'm Tuesday through Thursday/Friday. But adios, everybody. Hopefully you guys learned something, had a good morning, and I'll see you guys bright and early tomorrow morning if you're in stat trading. And if you're not, then I'll see you guys on the nightly vid. So adios and have a good rest of your day.